All right, perfect. So, yo, what is up for y'all in the YouTube replay? I hope you're having a great Saturday. Let me give you a quick stock portfolio update. Then I have a few stocks I want to share with you guys. So, this is my Webull account. This is my kind of growthy portfolio. We're up 15% all time in here. And I basically just own a lot of popular growthy stocks. One popular set of news that just came out was that Robinhood joins the S&P 500. So, if you own the S&P 500, you now own a little bit of Robinhood. So they were up like 7% after hours on that news, which is pretty cool. I got SoFi, AMD, T-Mobile, Sprouts Farmers Market, Progressive, some of the popular names. And then I have my Robinhood account. This is my main This is my main taxable account right here, where I basically just own a bunch of dividend growth stocks. So every stock you see in here does pay a dividend. And here's my total percent change in every stock. So luckily we are green on every single stock in here. Here's us year to date. We're up 16% year to date. Over the past year, we're up 22%. We also have a Roth IRA. A Roth IRA is just a retirement account, and these are all the stocks that I have here in my Roth IRA. Here's my total percent change in every stock. My newest position is CRMD. I bought it last week, and we're already down 12% on the position. So I think this is going to be an interesting stock for the long run that I'm holding. So yeah. Let's see here. And oh yeah, and then finally I have my buy and hold portfolio. So as you can see in the top left, this is called my buy and hold portfolio, where basically once I buy a stock in here, I try and just hold it forever. I try and just hold it on for the long run. And these are all the stocks that I've picked. You've probably never heard of a lot of these names, like Comfort Systems, Powell Industries, Amphenol, Perion. So some of these are some like not so popular names, but I really feel like they're hidden gem mid caps that are gonna outperform the S&P 500 in the long run. Hey, what up, Jen to Jan? What's up, man? He says, can we cover XPEV stock? I've XPEV. What is this one? Oh, this is Xpeng. So this is that Chinese company. Yeah, let's check it out right here. So what's their market cap? They're a $19 billion company. They're also Chinese. So yeah, we're going to convert their currency to USD just to better understand the business. But yeah, they sell like electric vehicles. Do they make money though? So they're actually barely losing any net income. This is great news. You know, the sales are really good. The sales have more than doubled year over year, you know, from 1.1 to 2.5. The losses have narrowed to only 67 million. You know, if you go look at what's that other Chinese car name? Neo? Yeah, Neo, dude, burns like $1 billion a month. Or, I mean, a quarter. Same with Rivian. Rivian loses a lot of money, but looks like Xpeng is actually doing pretty good, and that's probably why their stock price has been doing so well. So, out of all the electric vehicle stocks, Xpeng seems to be in a pretty nice position, and the analysts are expecting the revenue to continue to grow as well and actually make net income in 2 quarters. So, that'll be very interesting to see. But again, do beware, they are an ADR Chinese, so you are paying a little fee, annual fee for them. Take profits and repurchase lower. Yo, that's some people say that like with I think that's worth maybe doing for some companies, but like I'm not good at timing the market. Like whenever you sell out of a company, yeah, you got to buy in. Um, like if you sell out of a high quality company like Google at all time highs, you know, you got to get back in eventually because this is a stock you do just want to buy and never sell. But I'm not really good at timing and getting back in. So I'm just going to buy and never sell my position. Can you cover AppLovin? Yo, what up, Jim? Yeah, I'm pretty sure AppLovin was added into the S&P 500 as well. Yeah, that's why they're up 6.5% after hours. Yeah, AppLovin, Robinhood, and MCOR, ticker symbol EME, are all added into the S&P 500, which is pretty cool. And AppLovin really just prints money. It's actually ridiculous. So we go to or let me just go to their total sales right here. So if we go to their revenue, it's up 77% year over year. So that's very nice growth. So sales are up 77, but the net income's up 164% year over year. Specifically, look at this. Out of 1.26 billion of revenue, legit, this is crazy. Out of the 1.26 billion of total revenue, 819 million of that revenue was net income. Oops, I think I just disconnected my phone here. That's not good. AMD is crushing so bad. What about next week? Oh yeah, hey, we can look at AMD as well. Sorry, there's the net income. So yeah, they made 820 million of net income on that. So they have ridiculous net margins now. A 65% net margin. That margin expansion is ridiculous. 50% more profitable than the previous year. Reddit type gross margin. Same with free cash flow. So AppLovin is a great company that deserves to be in the S&P 500. So yeah. Hey, what up, crypto? He said card ULTY. Yeah, hey, give me a sec. We can check out those companies as well. But let's look at AMD. What up, Burn? So yeah, I didn't realize they were down so bad on Friday. They fell 6.5%. I do own AMD, by the way. Let me pull up my position. I have 11 shares of AMD, and at $124 a share. We didn't time the bottom. The bottom was, $80. We got in at $125, and we're still doing pretty decent on our position. We did sell a little bit at this 172, 176 level, and dang, it's at 150 today. But still, AMD, in my opinion, is a great long-term hold. Like, check out this PC GPU market share. Obviously, we know they sell GPUs. They have a 17% GPU market share, and that's where obviously half the revenue is their client and gaming business, which did grow 69% year over year. Very nice growth over there. But one of the main growth drivers for them has also been the data center business. Data centers need GPUs. AMD makes their own GPUs. So these year-over-year growth rates in the middle have been very strong recently on AMD. And, just the overall business. Sales are up 31. Net income's up to 900 mil. Free cash flow is at a record. The free cash flow grew 4x year over year. They have an absolute fortress of a balance sheet as well. So I don't know what's going to happen next week with AMD, but I'll probably wait till under 150 to maybe even under 145 to buy more. I'm already happy with my current position. So this is ULTY. I don't really love these kind of ETFs because these are covered call ETFs, and it's usually just a bleed out of your capital. So yeah, you get a crazy dividend yield. And by the way, this isn't the actual yield you get. The forward payouts are going lower. But as you know, whenever the price goes down of a stock, it makes the yield look higher. But the actual payouts are going down in the future. So the actual yield is lower. But you basically buy this to maximize your dividend income. You get paid a monthly dividend, but you can kind of just see by the trend of the actual stock price. This was made in March 2024. It was $20. Now it's legit $5. So I'd be careful with that one. How come Nvidia stock dropped? I'm new to investing. I'm not sure if there was any specific news there on Friday, or actually it was the Broadcom news. OpenAI switched from Nvidia to Broadcom. I don't know if that was it specifically, but I know they're a big Nvidia buyer technically. Like they use Microsoft, which buys the Nvidia chips. Why'd you choose? Yo, I love Moomoo. This is my favorite brokerage right here. Well, I actually have multiple, so I didn't just choose this one. I have all these different accounts as well. But yeah, can you do Duolingo? Yeah, let's do Duolingo. We can look at United Health and CNC. Remind me to get to these. Ooh, and Tempest AI. Tempest AI is a very nice one as well. But Duolingo right here, this one's like betting on the English language. So this one I believe is at a pretty good risk to reward. They're well off their peak of $500. They're basically 50% off their peak, which is unfortunate. And the financials look great. They had an incredible quarter. They beat big on every metric that the analysts were expecting. Duolingo is it's that language learning app. And if you don't pay for their subscription, you see a bunch of ads. And look at this, 84% of the revenue comes from their subscription business. And it just hits a new record every year, every quarter. I mean, these year-over-year growth rates are so consistent. Sales are up 46% after growing 50, after growing 45. So subscription revenue is at a record. And the advertising revenue is up 55%. So both main segments on Duolingo are growing very nicely. Sales are up 41, net income's up 83. So that means they have pricing power, net margin expansion. The free cash flow is great. Free cash flow is up 60%, 30% growth of the net margin, deleveraged the balance sheet. Assets went down with the liabilities, but liabilities more. So you really look at the leverage ratio. Everything on Duolingo is heading in the right direction financially. So that's why I would put that one on the watch list. I think they're overpricing in how AI is going to take over the language learning app. Hey, what's this one right here? ULTY is a weekly dividend. Oh, that is actually crazy. I didn't know that. CWEN. So what's this one? Clearway Energy. So there's like two different stocks. We'll just look at CWEN. So this app is telling me from a technical point of view that there is a double top. But that's technical analysis. As you know, I like digging into the financials. So they're in renewables and storage. That revenue's up 15%. Flexible generation, that one's down 27. But let's see, total revenues up by 7. And they're struggling with net income positivity. So we do want to see them kind of consistently make more net income. But it looks like the main growth driver has been this renewables and storage business. We want to kind of see them continue this growth. But I'd still be careful with that one. Pretty good RR. Hey, what up, Aventix? What's up? Appreciate that. Its PE is way too high. I forgot which stock we were talking about. Probably AMD. You know, AMD does have a high valuation. So, but you really do a peg and probably a forward PE, 2-year out forward PE. Someone said, can you do Super Micro? So I do own Super Micro as well. To be honest with you, almost every stock I own in here, like on this page, like I wouldn't buy at today's valuation. A lot of stuff is overvalued. And here's one I also wouldn't buy right now. I do own this one, so I might be biased. But I think Supermicro is going lower, probably to closer to the $35 level. So I would just wait to buy this one, even though they kind of look attractive right now. I would still wait to buy them. Here's why. Supermicro, one thing that really disappointed analysts was their margins. So the sales of the business, the lifeblood grew 7.5, good. But the actual profits, the net income, fell by 35% year over year. So, and that was real, wasn't some like one-time adjustment. So the net income fell by 34%. That means the margins are collapsing. They sell a commodity, but they install the service for you. But 3.4% margin. I'm scared of this margin number. They used to have great, closer to 10% margins, but low single digit is tough. They're giving customers bulk deals, so I'd be careful with them at this price. I think they might be going lower, so I wouldn't go crazy yet on them. CARD. Hey, what's this one? CARD. So this is Max Auto Industry negative 3x inverse leverage ETN, exchange traded notes. So yeah, I would be super, super careful with this thing. I wouldn't even touch it. It's at an all-time low. If you do buy this, you would just want to short-term swing trade it. You have a 1% expense ratio fee, so you're already losing 1%. So I'd be super careful with that one. I'd trade that thing. Looks very volatile though. Maybe that's why people like it though. So CNC stock. So this is Centene. This is that Medicare Medicaid business. They're kind of following the UNH headwinds around Medicare and Medicaid. Yo, Eli Chamont, thanks so much for the rose, by the way. I do really appreciate that. But here's CNC stock. I'm pretty sure they do Medicare, Medicaid. Yeah, so here, 60% of the revenue comes from Medicaid, 20% Medicare. There's so many headwinds headed for this business. We can see their net income is actually expected to go negative. It's been negative this quarter, and it's expected to be negative for the next 2 quarters. So they're basically expected, a business that used to make consistent net income is going to be losing net income for the next foreseeable future, the next couple quarters. So the regulation in the margins of these Medicare, Medicaid businesses are going to go down in the future. But yeah. All right. Do you think MSTR is good? No, I don't really. So, this is strategy. Okay. So, well, there's actually some new regulation around these like Bitcoin holding companies. They now have to disclose every time they issue shares. Like they used to just dilute the shareholder whenever, but now they have to have like certain shareholder approval. The NYSE isn't too happy with some of these companies, like Bitmine, MicroStrategy, because they dilute you. But that doesn't really change the business for right now though. But you basically value this one based off their NAV, their net asset value of their Bitcoin. If you're wondering, like this is incredible. Their balance sheet was $7 billion of assets, and now it's $64 billion. How did they get $64 billion of assets? Well, that's all the Bitcoin that they own. And here's how much they dilute you every quarter. You ready for this? This is the kind of thing that people don't get. They diluted you. Well, they buy Bitcoin with it. They're better than a lot of other companies, and it's worked because whenever they diluted you $18 billion to buy $20 billion of Bitcoin, they're up like 30-40% on that Bitcoin. But they're diluting you by billions every quarter. You can see that in the cash from financing activities. They diluted you by $7 billion, $18 billion. So they basically issue shares to buy Bitcoin, and you just trade it off their NAV of the Bitcoin. So it's kind of like a Bitcoin proxy. Florian or an ML, or let me look at SCHG, then we'll get to MELI. Yeah, we'll look at MELI after this. Try not to spam. I'll try and get to all these. Hey, what up, Hassan? And we can look at Iris Energy is pretty cool. They're like the better version of CoreWeave, in my opinion. So here's SCHG. This looks like a S&P 500 alternative ETF. Yeah, it has very similar holdings: Nvidia, Microsoft, Apple, then Amazon, then Broadcom, Meta, Google, Tesla, Visa. So pretty interesting. SCHG should have similar returns to the S&P 500. Nice. So this is MercadoLibre. I don't know how to pronounce it, but this is basically the Amazon of like Asia, I believe. Let me go check out where they get their sales from. So, or no, actually South America. Sorry. So do beware when you buy this stock. This isn't an American company. None of their revenue comes from the U.S. 55% comes from Brazil, 22% Mexico, 20% Argentina. So, and they're basically like the Amazon. So we look at their commerce services. It's up. Wow, it grew 49% year over year. They're in financial services, credit revenues. So let me just go to their sales here. So very strong growth. Sales are up 33 after growing 41. The net income was flat though. So it looks like the margins fell a bit year over year, but still they're making a lot of money and this is in USD. They're making over 500 million in net income a quarter. So these are great numbers. And basically South American Amazon. Look at projected EPS. Let me go to that right there. What's the net income multiple? They're trading at 59 times net income. Here's kind of what the analysts are expecting for EPS. They missed this quarter, but expect to be 11 and then 14. $14 of EPS might be a record quarter. Yeah, so in 2 quarters, they're expected to have a record net income. Should be 40% higher than this number. So they're expected to basically have around 750 million of net income in 2 quarters, which will be a record. That's why the multiple's high. What is this one? WAR? U.S. Global Technology and Aerospace Defense ETF. That's actually they have a nice ticker symbol. But let's go see what the ETF actually owns. So if you buy this ETF, it just breaks your money up for you into Raytheon, then Nvidia. That's interesting. Then Nvidia. That kind of doesn't fit the... Oh, Global Technology and Aerospace. Okay, so then Micron, Aero Environment. Aero Environment's actually pretty interesting. I'm doing more research on them. So yeah, those are all the holdings in that ETF. Kind of interesting. Hey, spread the wealth. What's up? What's up, Ryan? So here's Lululemon, yo. So this stock only showed the international growth stories. Their international growth is the real story here, but their North America or United States revenue only grew by 1% year over year. So the North America sales on Lululemon only grew 1%. Not great. Well, I wonder if there's any specific news down here. Lululemon revises annual outlook due to tariff impacts. So it looks like they had to lower their guidance. 19% day. That's tough. Because they missed on revenue, they beat on net income, and beat on EBITDA. So it really wasn't the end of the world of them. Looks like their margins did continue to fall. So let's go look at them. So the sales grew 6.5%, 23% international, only 1% US or domestic. So 6.5% revenue growth, but the net income actually fell by 5.6. So again, that means they're losing their margins. Their net margin fell by 11% year over year. They were mentioning some, tariff issues, but I wonder if they did any share buybacks this quarter. That's what I'd be curious to see. And unfortunately, all these share buybacks that they've been doing, they spent 280 mil, 400 mil. The stock just fell 20% to a new 52-week low. If they only waited, they could have bought 20% more stock with this money. But they spent 280 mil on buybacks. That is good news. They spent legit all their net income buying back their own shares. So look, here's what that does for you. Net income fell 5.6, but net income per share only fell by 1.5. So fell a little bit less because there's less shares that exist. But I'd be careful with Lululemon. I'd be really careful. Even after they fall 20%. I feel so bad for Lululemon. So, yo, what up, Nathan? He said, can we look at TW? Is that TradeWeb? Yeah, dude, TradeWeb. If you ever go on TV and watch CNBC or whatever, all the data and analytics they use are from TradeWeb. And they've always, dude, this one is one of the first stocks I've put on my watch list, like my never sell watch list, but it just has never gotten to a price I'm willing to pay. But check them out now. They report earnings on October 30th. Let's go analyze them. I am curious. So, uh, yes, this is why I love them. They're very growthy, very quality. Sales are up 26 after growing 30, after growing 5. So very nice sales growth and also actual profits, net income. Net income's up 28% year over year. They're making easily over 150 million in net income a quarter. How about free cash flow? Wow, free cash flow is up. These year over year growth rates are just so solid. Margins, 34% net margins, absolute monster of a balance sheet as well. Check that out. They got 1.63 billion of cash and no debt whatsoever. So no debt on the books. That's a huge safety net, That gives them a lot of freedom. So same with Duolingo. Yo, what's up? What 150? Hope you're having a great Saturday. Thanks again for the 3 roses. Another thing with TradeWeb, they have a dividend, 0.4% dividend. So they're on my watch list. I'd love to buy that company. I wonder why they're falling so much. So here's another kind of beauty stock. Oh, we got to look at IRED after this. Sorry, I keep forgetting. But here's Estee Lauder, ticker symbol EL. This is that beauty and cosmetics company. So they sell like perfumes. But the stock has been struggling. Like they're the same prices they were back in what year? 2015. So you bought the stock a decade ago. It's the same price today. So they haven't been too well of a performer, but here's what they sell. Skincare products, makeup is 30%, fragrances like high margin perfumes. As we can see, the sales have been kind of flat though. I think they've been seeing some increased competition. Yeah, look at the skincare revenue. It's lower than it was in 2019. You can usually, if you just look at the financials, you can usually sniff out why a stock isn't doing too good. Like look at their makeup revenue. It's down significantly from their 2019 level. Each one of these is a year. Fragrance sales are the only one holding up, but yeah, and check out what that's done to their actual profits. These beauty and cosmetic companies usually have really high margins, but they're struggling hard. They're losing a couple hundred million a quarter. Yeah, they made 150 mil last quarter, but it was still a 52% decline. I'd be careful with Estee Lauder. We really want to see them recover. Yeah, sales are down 12, so I can understand why the stock hasn't been doing too well. But maybe that's all behind them. It's nothing new. Analysts already know everything I just said, so I'd be careful still with that. So let's look at Iron right here. This is a data center business, a Bitcoin mining company, I believe. They own or they mine a little bit of Bitcoin, but let's see how they're doing. I know how they're doing. They're doing great. They deserve to be at this 52-week high level. Like, check out the growth of the sales. This is the ridiculous part. This is why they're at this new 52-week high level. This is why they deserve it, because the business beat all expectations. So the sales are up 230% after being up 100%. So a record revenue quarter, and out of this 187 million of revenue, 100 million of it was net income. Actually, let me verify that. So actually not 100 million of it. There was some sort of one-time adjustment, but they were still profitable. So they made closer to around 20 mil of net income. They have a good balance sheet as well. So yeah, I love how growthy they are. I do like that one. Thanks for doing this. I'm new. And hey, thanks for the follow, Julia. Hey, yeah, by the way, I sell nothing. I have no course, book, WhatsApp, Telegram. Watch out for people impersonating me. I'll never follow you, DM you. I'm just on here to give my opinion. And the best way to support me, if you do want to, is just subscribe to my YouTube channel. It's called Nathan Robert. I'm also streaming on there. William said, check out Toast. I bought the dip yesterday. Yo, awesome, William. I actually own Toast as well. I have 15 shares of them. I'm only up 5% on them. So yeah, they've been struggling for a while. But here's what I love about Toast right here. This is a restaurant payment processor, or like point of sale system provider. If you own a restaurant, you've probably used their service without even knowing it. Like if you ever go to a food truck and you see that little iPad looking thing, it's like, hey, would you like to leave a tip? That's either 10%, 20%, or 600%. That's usually that software, and everything's run by Toast, and they collect so many high margin fees off that. And I love how growthy the business is. So the sales are up 25%. That's great growth. Yeah, they beat on revenue expectations, they beat on net income, and they beat on EBITDA. It was a triple beat quarter, but I think the stock fell because of guidance. I'm not sure. I got to do more research on them, but I love how growthy the sales are, up 25%, and they're the most profitable they've ever been. They made 80 mil of net income. We zoom out, they used to lose 80 mil a quarter, but now they're consistently making net income, and at this growth rate, what's it going to be this time next year? They're probably going to be making easily 100 million in net income down the line of after-tax net income. Very solid balance sheet, deleveraging. These liabilities are staying the same, but if you notice, the assets are slowly trickling up. So the liabilities used to be 40% of the assets. Now it's only 35. So, and dude, the cash flow numbers are even better. The cash flow is up 80%. What about the actual free cash flow? Free cash flow is up 92, 200 mil of free cash flow. So Toast is a cool restaurant stock mid cap. It's worth 25 bill. I do own them, so I might be biased, but nice. Hey, what up, Eventix? Appreciate that. He said TEM. So let's look at Tempest AI. This stock is owned. And hey, Sean Cam and Caroline. I didn't even see that. Thanks so much for the roses. I really appreciate y'all. Thanks so much, Sean and Caroline. If you got a stock you want to look at, let me know. I'll check it out in the chat for you. But here's Tempest AI. Nancy Pelosi and her husband did decide to buy this company. And I can see why, because they have great financials. Like they're very niche. They're in genomics. In this business, we just look at the revenue. This business grew 115% to a new record. This is insane. So I love companies with growing fundamentals, and not just the genomics business, but also the data and services. That grew 35% year over year after growing 32. So continuing the growth on both segments of business. I would still be cautious. They are still losing net income every quarter, but it's definitely getting better. It's trending in the right direction. They're losing less and less money. And it's okay for them to lose money right now because of how growthy they are. As long as they keep up this growth, that means sales are up 89%. Incredible. So Tempest AI, I do really like them. I don't own them, but I think Nancy Pelosi, I wonder if I can find that actually. Nancy Pelosi and her husband do actually own some Tempest AI. I won't go and find that. But anyway, let's keep going here. What is Pony AI? What's the ticker symbol? Toast is just moving into the international market. Hey, that could be a great future growth driver. Is this? No, this is not Interactive Brokers. Yeah, hey, if you want to get this app I'm on, it's in the link tree in my bio. It's the very first link there. It's a brokerage where you buy stocks on. It's my favorite one, lowest fee brokerage, best analysis tool. So, hey, what up, German? Hope you're having a good day. Let's see. FOURAD. What FOUR says is another. Someone said Toast is a competitor to Shift4 Payments. Let's go check out this company. Let me see if I like this company more than Toast. I'll give you my analysis. So they're half the size, first off, or maybe potentially less than half the market cap. But let's go check out how the sales are doing. So the sales are less growth. They're up 16% year over year, but $1 billion of revenue nearly. So $1 billion of revenue, and they made 41 million net income on that. So actually, Toast made double the net income, and they have. This one's still interesting. The net income, actually, really look at the operating profit. The operating profit grew 38% year over year. This one looks interesting. A bit more of a leveraged balance sheet. It looks like they maybe went through some acquisition. Let me see. No, or I don't know how the assets just went up a bunch. Look at their cash pile. It went from 1.17 to 3 billion. Did they dilute you? Yeah, so actually do beware. If this number is positive, that means they either diluted you by issuing shares or they rose some debt. So you can see the same time they did that right here too. That's how the assets bumped up a huge chunk exactly whenever they issued debt. Also, another way to see, was the share dilution? Let's go see. We go to the cash flow statement. So no, it wasn't share dilution. It was just debt. Anyway, that's another interesting one. I like Toast though. They could be better. All right. What do you think? Yeah, we just looked at Lululemon. I feel bad for Lululemon. They fell 20%. We will look at Lululemon. Just give me 5 minutes because we looked at them not too long ago. So here's CPRX. I might be biased on this name when I cover this because I do own them, by the way. And I am down 10% on my position. So there's my cost basis. I got 24 shares at $22. And here's why, out of all the healthcare names out there, with a low market cap, this is one of my favorite ones. So check out the whole company's market cap. You're paying a $2.48 billion market cap. Here's why I think that's very reasonable, if not undervalued. $2.48 billion company with no debt and $652 million of cash. That's the incredible part. Legit 30% of the entire company, entire market cap is just their cash on hand. That gives them so much freedom. They could acquire a business. They could do crazy share buybacks. They could even pay dividends in the future, but they're just deciding to keep their cash on hand, raising their cash pile. Cash is up from 370 to 650. Are they earning interest on that? I bet they are. Yeah, they made $6 million of interest right now. A lot of companies are paying negative interest, 6-7%, but since they have no debt and a lot of cash, they're earning interest. And if we go to their net income, they're printing money, 50 mil of net income a quarter. It's incredible. They sell basically these 3 different prescriptions, so they're not too diversified. There is some concentration, but for DAPC, that one's up 9% year over year. Oh yeah, they started selling this new product called Agamree, I don't know, but they just created it in 2024. It was $1 million of sales. Now it's at a record 27 million this quarter. So I am curious to see the growth of this. So it's just a healthcare play. They own just like 3 different products, but they have a great financial condition. 600 mil of cash, no debt, $2.5 billion company. I think it's reasonable. And and again, as much as I love them with some of these healthcare sectors, you can't have them as a meaningful size position. Like as much as I love them, I just got about $400 or $500 in them. And as much as I love PSIX, as much as I love Supermicro and SoFi and Dave and Hood, I can't make them meaningful size positions. All right, what do you think of Citigroup? Hey, what's the ticker symbol for Citigroup? I will check that out for you, Mer. What's up, man? What is Redwire? I don't know what that is. If you give me a ticker symbol, I can maybe check it out for you. So let's see. Oh yeah, Pony. Oh yeah, this is that yeah, what's up, Badav? So here's Pony AI. They're actually a pretty big company, a $5 billion market cap. Looks like they just IPO'd. So if I zoom out on the chart here, they IPO'd in December 2024. So basically January of this year, the beginning of 2025, they went public. Do they have sales? Let's see. They do 21 million of sales. And a phenomenal balance sheet. Wow, let's see. So 600 mil of cash and no debt. So actually over 10% of their entire market cap is just their cash on hand. So that's interesting. They aren't making that income though, so do beware. They are losing a bit of money. Besides the cash on hand, nothing's blowing me away too much here. I mean, the sales are up 75%. That is good, but it's only 21 mil. Toyota Motor owns 12% of all the shares. That's interesting. Maybe there's some sort of AI car company. I don't know. Okay, so I wanted to get to another stock here. Where was it? Let me scroll up. I forgot what it is. Oh, well, sorry. Let's keep going, though. We'll look at them. What's up, V? So he said Palantir. What do you think of Palantir? Yeah, I love Palantir, but I don't love the valuation. One thing, they lost a big government contract to. Oh, hey, well, there's the news right there. Salesforce wins U.S. Army contract over Palantir, citing competitive pricing. So Salesforce got the deal and Palantir didn't. I don't know, for a defense contract. But anyway, here's what I love about Palantir. The one thing I don't love is the tough valuation. They're trading at 105 times sales. Not 105 times profits and net income, but 105 times revenue. But here's why they might deserve it. Or they deserve a high premium, but I don't know about this high. Check out the government revenue. The government contracts. If they got that U.S. Army deal, it would be added to this. But it's still growing phenomenally. It's up 49%. That's the highest growth rate I see on the screen. So the growth rate is growing. The government revenue is growing. A lot of police stations use the government software. Also, the commercial revenue, S&P 500 companies like Google. This business is up 50% year over year after growing 32, after growing 10. So both main segments of business are growing like crazy. They had their first ever $1 billion revenue quarter and added this exact billion of revenue. 330 mil was net income. So that's easy net margin math. So 33% net margin, record margin quarter, phenomenal, monstrous balance sheet right here. Palantir legit has no debt. No debt, $6 billion of cash, up from $4 billion. They just have a great product, but very high margin. But I just can't pay the premium that they trade at. But again, they might deserve that high premium, and they might never get to a valuation that I'm comfortable with paying. What's their EBITDA? Oh, hey, I forgot what stock we were looking at there. SMMT, please. And what's your favorite cybersecurity pick? Ooh, Fortinet is a great one. That's probably my second or third favorite pick. My favorite one's just PANW, Palo Alto Network. I'll cover them after this. But someone said SMMT, Summit Therapeutics, a $19 billion market cap. Let's go do some analysis on them. So looks like they don't have sales right now. So when we go to the revenue, you notice it says from 2022. So for right now, so they don't sell anything. They don't sell a product or a service. I'm guessing the reason, if we look right here, there was no earnings this day. The reason they rallied up was because they got FDA approval to finally sell a product. So that's what I'm guessing. It looks like next quarter, analysts are expecting 76 million of revenue, but they lost 600 mil this quarter. That seems extreme. So that puts some pressure on their market cap. Anyway, I would be careful with this one just because of the fact that they have no revenue right now. I'm assuming they're going to finally recognize some revenue soon. So these will be some very crucial, very important quarters to watch as they finally transition from a revenue-less company to finally having sales. But I don't know about all that. Okay, favorite cybersecurity stock. Fortinet is a great one, and I'd happily own them. But one of my favorite ones is actually one owned by Nancy Pelosi. So if you go to the Nancy Pelosi portfolio, ticker symbol PANW, Palo Alto Networks, they just have a great service. They're a $130 billion market cap. So a huge market cap, and they're a subscription model company. So half of their revenue comes from their subscription business. And check out the annual growth here. Just hits a new record every year, every quarter. These year-over-year growth rates are just ridiculous. Like, it never goes negative. So it's at a new record, 1.32 billion this quarter. How's the other business? Support revenue, also see that's at a record. Product revenue also at a record. So this one just grows. I think they're the largest player out there. I don't know, but sales are up 15. They're making a couple hundred mil in net income a quarter, printing free cash flow. So PanW is a cool cybersecurity play, and I think cybersecurity is a great sector to be in. What app is this? Oh, hey, Daniel. Yeah, hey, by the way, I'm on a brokerage right here. It's in the link tree in my bio. It's the very first link there if you want to get it. My favorite one. So, yeah. So, Sean, thanks again for the rose there, man. I do appreciate that. I feel bad about this company because I wouldn't buy this one. So, here's Lucid. They were up 14%, but they hit an all-time low the day before. So, here's why I would still avoid buying this one. Even though they're at all-time lows, I wouldn't buy this one. So, check out the market cap. And I'm not trying to be bearish, but from a math point of view, financials, though, if I analyze them the way I would any other company, this one I wouldn't buy even at all-time lows. I just wouldn't want to own. So they're a $5.6 billion company. So kind of remember that in the back of your mind. The whole company is worth $5.6 billion. They lost 10% of the whole company this quarter. They lost $540 million. So they lost 10% of their entire business just in net income just this quarter. Also, they're diluting the life out of you while the stock's at all-time lows. It's really tough, but they're burning through net income. They're leveraging up the balance sheet. The liabilities were 57% of the assets. Now it's 72. These net income losses got to go somewhere. 400 mil. They lost 400 mil that quarter. 400 mil. They lost $1 billion. So just in the past year, they've lost over $2 billion, and the whole company is worth $5.66 billion. And, these net income losses aren't really expected to get better. They're expected for the next couple of quarters to continue to lose 500 mil a quarter. So there's real bankruptcy risk there. That's the thing. They got a real Hey, let me know, Nathan, if you want me to look at Fortinet. I will happily cover that stock. Let's get to what is RDW. I forgot to that one. Redwire. Okay, so a very small company, a $1.2 billion company. Looks like they've been struggling for a while. They reported earnings and gapped down on that day. Let's go see what they reported. So, yeah, huge miss on the revenue. So analysts were expecting 80 mil. They reported only 61 mil. And the next two quarters are crucial. Looks like the revenue is expected to jump up to 130 and 150. But if they just missed this revenue expectation by, 30%, and they missed, oh my goodness, they missed like crazy on EBITDA. That's tough right there. So they're just missing on every expectation, unfortunately. Yeah, the sales are down 21%. They lost 100 mil on that. I'd be so careful with Redwire. Yikes. So let's go to Lululemon, man. This company had not some great earnings. So the actual U.S. revenue grew by just 1%. So the U.S. North America revenue grew by 1%. It was pretty much nothing. But the international business grew by 25%. But it's such a smaller portion of their revenue. So the total revenue combined was only up 6% year over year. They missed on the analyst expectations very lightly, though. They missed on revenue just very lightly, but it was really the guidance I heard them too. They lowered their guidance on expected tariff input cost. But check out the revenue. It's up 6.5. The revenue's up 6.5, but the profits, the net income is down by 5. So that means they're losing their pricing power, they're losing their margins. So the net margin fell by 11% year over year. Not great, but still they're making a lot of money, 300 mil plus a quarter easily. They do have some poorly timed buybacks. Like if we look all the time in the past year, they're spending a couple hundred mil. They pretty much spent all their net income this quarter on buybacks. They're plowing money into buybacks, but all those buybacks were at, a price 30 to 40% higher than where it's at today. So I almost wish Lululemon, instead of spending hundreds of millions a quarter on buybacks, would spend it on innovating in the business, buying maybe, I don't know, they could acquire a company. I don't think they would do that, but making their products more quality. I I still think they're worth looking into, though. They might have overdone that huge sell-off, but yeah, they probably need to trade under 10 times net income. Don't know if you covered it yet. AMD. Hey, yeah, actually, we covered AMD not that long ago. We'll look at it next. Actually, BBB said, can we look at IBKR and SoFi? Let me cover SoFi. Then we'll cover AMD. So the Neo, yeah, I'd be so careful with Neo. Hey, JG, remind me to look at United Healthcare. I do want to look at UNH and CRMD. Yo, that's my most recent stock purchase, CRMD. But here's SoFi Technologies. By the way, I do own this one. I might be biased. It's one of my best performers. I regret every share I've ever sold of SoFi. I bought this company legit, was it back here? Yeah, I bought all my shares of SoFi back in January 2023. So it's been a long time I've held this company before. So here's why I didn't expect them to pull off these numbers, and since they pulled them off, this is why they're at $25 plus right now. They deserve it, man. This is so impressive. If we look at their financial services business, that revenue is up 105% year over year. It's more than doubled year over year. These growth rates of the financial services are just ridiculous, and that's why they deserve this hype around them. So that business is up 105, and the lending revenue, their main source of business, is up 30%, also to a new record. So both main segments of business are growing like crazy. Also, they have the technology platform. Hey, that's up 15%, also to a new record. So every business is at a record. The total sales are up 42%, 850 mil of revenue. Out of the 850 mil of revenue, 98 million of it was net income. So they made 100 mil of net income this quarter. People are really starting to take SoFi serious. They're profitable. They're growing like crazy. The margins are growing. The financial services are growing. Everything about SoFi is growing. Like a nice growth stock, but the valuation does look tough, over 25 share. Okay, let me pull up UNH, let me look at UNH, then we'll get to AMD, and then we can look at some of these other ones like CRMD. Sorry, I try to be really quick here out of respect for everyone's time. I only spend like a minute on each stock here, but here's United Healthcare. Warren Buffett just bought the dip on this stock. That's why they gapped up on this day right here. The whole gap up was solely on the news of Warren Buffett buying. And Warren Buffett doesn't really buy stocks unless he really does his due diligence. So that'll be very interesting. But one thing, I wouldn't buy this one here. To be honest with you, I wouldn't even buy this one over $300 a share. I would wait till under $300 to buy this at all. Not financial advice, because there's still a lot of headwinds. They have a nice yield, 2.7% dividend, but they're actually soon not going to be able to afford the dividend, according to even the analysts. So if we go to EPS right here, the EPS is expected to go from $6 to $1.70. And the dividend costs $2.20 of net income per share. So they won't actually be able to afford the dividend in 2 quarters. So that's why the multiple has collapsed. That's why the PE is a 13, because the net income is expected to collapse. So there's a lot of regulation headwinds in the Medicare, Medicaid sector. But Warren Buffett can see through it. Maybe I just wouldn't over $300. Not financial advice. And if I wouldn't have UNH as a meaningful size position. So, hey, what up, Eunice? How's it going? So let's check out AMD right here. So another stock I do own. They had a rough Friday. They were down 6.5% on Friday. Luckily, we're still up a good chunk on them. But check out their GPU market share. They have a nice, Obviously, we know they sell GPUs. They have a nice 17% PC GPU market share. It's a cool little stat we get. That's where their client and gaming revenues from. That business is up 69% year over year. Also, the huge growth for them has also been in the data center business. Data centers need GPUs, and they make great GPUs, and they can supply them to themselves at the lowest cost and the quickest out of anyone. And the growth is finally back on AMD. Sales are up 31. If we go back to here, single digit sales, 2, 8, but now the sales are up 31. They're making real profits, 900 mil of after tax net income. That's great news. Also, the free cash flow, the FCF was 1.73 billion. That's a record free cash flow quarter. Also, phenomenal balance sheet on AMD, no net debt, pretty much no debt at all. The debt is like very minimal. So they're great. Hey, thanks, William. I do appreciate that. What do you think? Oh yeah, Neo. Hey, yeah, we'll look at Neo. I have nothing good to say about Neo. I think that's just one you don't want to own. I'd rather buy Xpeng than Neo. But here's this next stock I want to go over is one I actually own in my Roth IRA. So we go over to our Roth IRA right here. My newest purchase is actually the 16 shares of CRMD. And by the way, we're down 12% on my position. So do beware. And I'm about to give a pitch for this stock. That's not financial advice. Do beware if you find the stock interesting, you cannot make it a meaningful size position. Like maybe $100 or 200 at most. You can't make this as a meaningful chunk of your portfolio. But let me give you a pitch for why I think this one is legit, a 3x potential stock. Look at this market cap on the top right. And we'll think about this logically here. They're only worth $925 million. Remember that number. They're worth $925 million, and they have no debt and $190 million of cash. So kind of think about that. 190 mil of cash and no debt. So over 20% of the entire company's market cap, what you're paying for is their cash on hand. That's such a nice safety net. That gives them so much freedom to do whatever they want with. They have a bunch of money, and they're actually putting that money to use. They just acquired a company. Actually, if you want to see more about this stock, my very most recent YouTube video, I do a whole 8-minute analysis on this company. I go over their investor presentation. I'll show you the acquisitions. But check out this. This is another reason. So first off, 20% of the company's cash. Great news. But they finally have sales. It was last year, no sales, 29,000 a quarter. But now it's 39 million, a record quarter, 39 million of revenue. But check this out. Added as 39 million of revenue, 19 million of it was net income. I kid you not. They have Reddit type margins. They have 50% net margins on this prescription. Again, they only sell one thing right now, Deaf and Cath, and 60% of the sales come from this one hospital group, one customer. So there is some customer concentration risk here. But again, they just acquired a company that introduced. They now sell 7 products instead of 1. We can kind of see that from the analyst expectations of the revenue. The revenue is expected to go from 39 mil to 98 mil. And out of that, same 50% net margin, 55 million of EBITDA expected. I can't believe this is only worth $925 million. In my opinion, not financial advice. The market cap should be $3 billion. But there is some risk, but that's a cool one. I think it's worth putting a small amount of money into. So, hey, what up, IDK? How about, we just covered SoFi stock legit 5 minutes ago, but I'll check out Visa for you. I really like Visa. Nancy Pelosi also owns this company. Do you think Amazon will hit all-time high end of next month? I don't know about end of next month, but I do believe Amazon will hit a new all-time high eventually. I am a shareholder. I might be biased. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's a brokerage where you buy stocks. Link tree in bio, first link, or you can just go to Google, type in Moomoo, which is a brokerage. But here's Visa. Here's what I love about Visa. They have basically a shared duopoly with MasterCard. All those small little credit card transaction fees that are slowly bankrupting us are making Visa a boatload of money. They're making over $5 billion of annual tax, they make over $5 billion of after-tax net income a quarter. So what is Visa doing with $5 billion of after-tax net income a quarter? They are spending it all on share buybacks. They legit spend $4 to $5 billion a quarter solely buying back their own shares. That's the ridiculous part. So that's how, if we look at the EPS versus net income, the net income is up by 8%, but the net income per share is up by 12% because the share part of the ratio is going down. I love Visa. It's a great never sell stock. You also get a near 1% dividend. Visa is just a great one. Yeah, Nancy Pelosi also owns them. Yeah, if you want to see how to check that, you just go to the Discover tab at the bottom, then you go to Insights, and you can see all the portfolios. I'm pretty sure, with Nancy Pelosi, I can just check for ourselves. Yeah, 2.3% of our portfolios in Visa. And someone just asked about Amazon. Let me go over Amazon now because I own this one, by the way, as well. That little purple line there, right there at 186 is where I bought all my shares. So I do own some Amazon. I might be biased on this company. I have been kind of increasing my exposure. I don't mind dollar cost averaging up on Amazon because they're a never sell stock. So actually, the most valuable part of Amazon is the AWS business, the Amazon Web Services. They're the number one cloud provider, and this is over $100 billion of annual revenue for them. It brings the most of their bottom line, like their online stores. Whenever you get something received to your door by the next day, that's very low margin, low single digit margin. But this AWS cloud service provider business, they have insane margins on, and it contributes the most to their actual net income. The law of large numbers is starting to hurt Amazon, like legit. 167 billion of revenue this quarter, the past 3 months. I don't see them doubling that, but they should grow a nice CAGR. But this is a real net margin expansion story on Amazon. So yeah, the revenue's up by 13, but the after-tax net income is up by 34 to $18 billion. They're making close to 20 billion of after-tax net income a quarter. They're deleveraging the balance sheet. Liabilities were 57% of the assets, now only 51. They have great capital allocation. They're so growthy. They invest for the future. They spent $40 billion just this quarter on cash from investing activities, investing in the future, buying new assets, expanding their facilities. They're investing this money to get a return. So it's great news that this is negative, that this number was positive. That means they're selling assets, which you never want to see. But there's Jeffrey Bezos. He got 8.4% of all the shares. That's how these guys are billionaires. He owns 8.3% of a $2.48 trillion asset. That's, it's not liquid money. He could sell it and it'd be liquid, but that's crazy. The rich, here's what they do. They're like, hey, I have 100 billion of stock value. I can take out a loan against this, which is tax-free. You take out a loan against it and live off that money. Anyway, thanks for sharing the Visa stock. Yeah, what's up, man? No problem. I bought Innodata 2 days ago. I'm already up 20%. Yo, great, dude. Hey, what up, Captain? Captain Obvious, what's up, dude? We can check Open Door out, too. So JVM said, I bought Innodata 2 days ago. I do own this company, by the way. What up, that one, dude? Yeah, REGN, UVIX. Yeah, hey, sorry if I don't get to all these. I do want to get to them. But I do own this stock, actually, Innodata, here in my Roth IRA. And he said, what's your cost basis? Yeah, if you ever want to know how much I'm up and down on a stock, I'm up 29% on them, or my average cost is $33. Here, I'll just show you this real quick. Here's my lifetime performance in here. We're only up 4% all time in here. And here's my total percent change on every stock. And then, of course, we also have our main tax. We have our main taxable. I can't swipe out of this? Okay. We have our main taxable account as well. Here's how much we're up on every stock in here. So luckily we are doing pretty good. But let me give you an analysis on Innodata right here. Yeah, check out these past 2 candlestick days. It's actually been pretty crazy. The stock just a couple of days ago was 36. Now it's 43. So yeah, and I don't think there was any specific news. I think the stock just went up. Chinese tech implements mandatory AI content labeling system. That should help Innodata. I don't know, but here's what I love about them specifically is their DDS, Digital Data Solutions business. This is all organic growth. Like they didn't acquire a company to get this. It's up 99% after growing 92. So the growth is ridiculous on their Digital Data Solutions. And it's not just the revenue that's growing, but the actual profits, the net income. They're making net income every single quarter. 5 of the Magnificent 7 are customers. X, Apple, and Tesla, all the other Mag 7 are customers. So Meta, Google, Microsoft, Nvidia, they're all customers and use this company's software. So the revenue's up 79 after growing 65. And check this out. This was a record quarter, 58 mil of revenue. And according to the analyst, it's expected to continue to climb. 59 mil next quarter, but then 72 mil. And make net income on that, of course, as well. Net income and free cash flow. And remember, the market cap is pretty small. They're only a $1.38 billion market cap. So that's why I think there's more upside in this name, not financial advice. I do own them, so I might be biased again. But yeah. Okay. Emerson Electric Group. Oh, hey, EME, this is basically an HVAC company. They just joined the S&P 500. So yeah, this stock just got added into the S&P 500. I own their number one competitor. I'm actually so sad Comfort Systems didn't get added. If you look at the two stock prices, the legit charts are near identical. But yeah, Comfort Systems, MCore, I love both of those. Okay, REGN, and we could look at Novo Nordisk as well. Yeah, let's do REGN. Then we got to look at UVIX. I want to get to all of these. I'm so sorry. So here's REGN. This company has a product. The reason the stock tanked right here, went from 1,000 plus to 500, was because they sold this product called Isla, and another company infringed on their patent. And the court said it was okay. So they no longer have like exclusivity for this product right here. And that's kind of the bad news. You know, it was a huge chunk of their business. If you go to the Isla sales, it's down 38% year over year. And these year over year growth rates aren't great for Isla, but it's partially offset by them selling the higher dose version of their product, Isla HD, which was up 29% to a new record. They created this in 2023. So it's offset by this growth. But that is something you do got to be aware. How's this main business doing? The collaboration revenue. This is great news. This is up 22% year over year. So the other products besides Isla are growing. They also are like a great value play. What's the multiple on this sucker? Yeah, a 14 PE. So they're trading at 14 times net income. You get a dividend now. They have done insane share buybacks. How much? So they've bought back 6% of all the shares in the past year. So here's how you can tell. Here's how I did that math. The net income fell by 2.8. So the net income's down by 2.8, but the net income per share is up by 3.2. So that means, the share part of the ratio went down by 6%. So easy math. They also have a phenomenal balance sheet. REGN's a cool one. They're a cool healthcare play. But I'd always recommend you got to go do your own research on that. Eero said, what platform is this? Yeah, hey, again, if you want to get this app, it's in the link tree in my bio. It's the very first link there. It's where you buy stocks. It's a brokerage. Yusuf said Target stock. A lot of people I know who used to be, Target shoppers aren't so much anymore. They go to Costco and it doesn't have the same spark that it used to. Everyone in there is so friendly, but here's the one reason I do like Target stock though. And also another reason they're getting hit more is because they're more discretionary than your average grocery store. If you go to Target, you don't mainly go there to buy groceries like milk, but you're buying stuff or it should break it down for us. You're buying stuff like household essentials, apparel, home furnishing, decorations, hardline, beauty products. So it's more discretionary than your average just grocery store. And I think that's why they've been getting hurt so bad. But check out the yield. You get a very nice yield with this company, a 4.8% dividend. We're going to go do the math for ourselves and see, is this dividend safe? Also, investors aren't too happy. They kind of lost their growth, organic. The sales, the lifeblood of the company are down by 1%. So we do want to see the growth come back. But this is the best part. Oh, the margins did fall too, but they're making nearly $1 billion of net income a quarter. So we'll have to assume they make $1 billion of net income every quarter. Let's go see how much the dividend cost. The dividend cost exactly $509 million. So they're making double that. So as we know, they can easily afford the dividend. That's, 4.8%. That's a very nice yield. Oh, the payout ratio is there too, a 50% payout ratio, but that's based off the last full year. Doesn't include the most recent 2 quarters. Yeah, they're kind of a dividend play. I don't really expect them to outperform in the long run though. Oh, hey, yes, another recommendation for Toast. What platform? Yeah, hey, Grandpa, it's in the link tree in my bio, very first link there. It's a brokerage where you buy stocks and stuff. My favorite one, lowest fee, most useful features. I keep my idle cash in here. That's in the middle of my screen. It earns the, Wi-Fi just went out. That's not good. Okay, thank you, TikTok. Okay, sorry. My Wi-Fi legit went out, but now it's back. So hopefully we're good. If the stream lagged, it's not your fault. Sorry. Let's get back to this though. Again, I don't know if you heard any of that, but Linktree in bio, very first link if you want to get this app I'm on. It's an affiliate link, full disclosure. So if you sign up, we'll actually both get a fractional share of Nvidia. So let's go to Toast right here. This is that restaurant payment processor. I do own them. Actually, I'll show you that right here. Full disclosure. I own 15 shares of Toast and I'm up 5%. So we're not up crazy. We're only up 5% on Toast. Here's what I like about them though. They're very growthy. and they're the most profitable they've ever been. So if we go to the sales right here, the sales are up 25% after growing 26, after growing 37, after growing 50. So the revenue just continues to climb to a new record. And it's not just revenue they're making, but actual profits, net income. They made 80 mil of net income this quarter. That's a record net income quarter. They used to lose net income. Now they make net income every quarter. But at this growth rate, what's it going to be this time next year? The same time next year? Probably a lot more than 80 mil, probably closer to the 100 million. We can kind of see that as well. This orange line is what the analysts were expecting. They beat on net income by 30% this quarter. They beat on sales by a nice chunk. They're beating on every analyst expectation. So I do like Toast. I think hey, AppleTree, Linktree in bio, very first link there. It's a brokerage. Open Door. Hey, thanks, Eunice. Yeah, if you want to support me, hit the like button. I do appreciate that. I sell nothing, by the way. I have no course book, Discord, none of that. Only thing I do have is that affiliate link. So, full disclosure, I do get a little fractional share. We both do if you sign up and deposit. Anyway, here's Open Door Technology, but I don't sell anything myself. Just beware. I'll never follow you, DM you. I have no course book, WhatsApp, nothing. So here's Open Door. This company just flip houses. They're very interest rate sensitive. And let me show you what happened the very last time we went into a low interest rate environment. Here's why investors are so forward looking right now. In 2022, with zero interest rate environment, they were printed money. This company just flip houses, but they're not very good at flipping houses, but they're making like $4 to $5 billion of revenue quarter in 2022. But then as interest rates hiked up, look what that did to their sales. 70% decline, under $1 billion of revenue. And now it's just chilling right here. So they're super interest rate sensitive. And guess what the market's pricing in? With a 90% certainty, interest rates are going to get cut next month. Or this month. No, it is September already. So Open Door Technology CEO quit. Anyway, that's all right. And they also just cut a bunch of their headcount. So it's really now finally helping out their bottom line. They're losing less net income than expected. They only lost 29 mil. They used to burn through nearly 100 mil a quarter. It was tough, but I wouldn't buy them here. They're so momentum-y right now. I would buy other interest rate sensitive stocks, but that one's where all the volatility is. So if you're looking for someone to swing trade, maybe go to that one, but I'd be careful. Okay. Yeah. Hey, try not to spam there. Hey, what up, Lulu? How's it going? Appreciate that. So which stock will skyrocket? It's hard to predict. Yeah. I just buy and hold what I think are great companies, and I'll wait forever I'll wait however long it takes for them to go up. Like Robinhood, for example. Here's the thing this is my best performing stock of all time. I regret every share I've ever sold of Robinhood, but check this out. I was down on this position for 3 years. Here's where I bought my Robinhood. You ready? Here's how long I've been in this stock. Here's where they IPO'd, and I bought all my shares of Robinhood right here and a little more after. And each one of these earnings that goes by is 3 months. So I legit waited years, and then finally I had a little bit of profit on Robinhood, and they just skyrocketed. So sometimes you just got to hold on for a while, but also sometimes it's worth selling out of bad companies. So here's CRDO. This is a great company. I wish I owned this one, but they had a great earnings report. They had a huge beat on revenue, huge beat on net income. I mean, nearly a beat by double on net income and on EBIT. So it was a triple beat. I'm no surprise they're at an all-time high. Usually you can understand why stock is at an all-time high just by giving a quick glance at their financials. Here's why this company deserves it. This sales growth is nuts. The sales are up 280% year over year after growing 70%. The sales are just at a record. And out of this $223 million of revenue, they made $63 million of after-tax net income. They're the most profitable they've ever been. At this insane growth rate, they're going to continue this growth. What's it going to be the same time next year? And what are the profits going to be? I can't wait. And they have an absolute fortress of a balance sheet as well. CRDO has no debt, $480 million of cash and no debt. I mean, insane. So, okay, we'll check out this one. WKSP. What is this one? WKSP. So this is Work Sport. So we don't really cover these stocks on the channel here. If you look in the top right, you see the market cap, they're only worth $20 million, $22 million company. Stocks at an all-time low. Do they have sales? They do have sales, 4 million. It's at a record, actually. It's not hard to grow small numbers, though. So 4 million of sales, lost 4 million in net income. So here's why you got to be so careful with this stock. Remember, the whole company, You're buying it at a valuation of 22 mil. You're buying a company that loses 4 mil a quarter. That's devastating. That's a huge chunk of their entire company. So a $25 million company that loses 5 mil, 4 mil a quarter, I couldn't buy that. So they might have real bankruptcy risk. That might be why the stock's at all-time lows, just from a flow financial point of view. What is Sono Group? Sono Group. That must be SMSSM stock. Oh, another one we won't really cover. Yeah, the whole company's worth $21 million, but they were up six. Look at the freaking volume on these candles. But yeah, they were up 60% on Friday. There must have been some good news. Sonos receives approval to trade shares on NASDAQ from OTC. So they went from OTC to NASDAQ. They're a European company. I don't know. I'd be... Okay, someone said Moody's stock. Yo, you know who owns Moody's is actually the homie Warren Buffett. So obviously we can see his portfolio because he's a super investor, and over 4% of his portfolio is in Moody's. This is one of the credit rating companies. There's S&P Global, Moody's, Fitch, State Street, and those are really the only players. So let's see. Moody's Investor Services. So the sales are down by 0.4% year over year on that business. Then they have Moody's Analytics. Well, this one's growing nicely. That one's up 10% year over year. Let me just see the revenue. So revenue's up by 4. Net incomes, wow, they're making a consistent stream of net income. 500 mil. If you average it out, 500 mil plus of net income every quarter. You get a nice 0.8% dividend, so a 0.8% dividend yield. The PE is a bit expensive, 42 times net income. For a business that's growing single digits, I assume the growth is going to come back. Yeah, Berkshire Hathaway, Warren Buffett is the largest shareholder. They own 13.75% of all the shares. I do really like Moody's, though, but I think the valuation might be a little high. I wouldn't pay the price right now. Okay. Let's see. Did you buy PGY, bro? What is that? Oh, Pagaya Technologies. No, I do not own this company, but it looks like they've been doing pretty good the past couple weeks here. A $2.8 billion company, so a pretty small market cap, $2.8 billion company. But where is their sales come from? So all their sales come from the U.S. That's good. The sales are up by 31% after growing 30%. So that's very nice. And they made net income this quarter. They're the most profitable they've ever been this quarter. That's great news. What industry are they in? You know what? I'll put them on the watch list. Engages in development of AI and data networks. Okay, pretty interesting. Okay, oops, sorry, my cursor was on the screen. All right, hey, what up, Will? How's it going, man? Yeah, hope y'all are having a great Saturday, by the way. So, yeah, no problem, JG. Thoughts on SoundHound? Ooh, yeah, SoundHound AI. So this company, there's really only one thing you want to watch. If you're a shareholder of this stock, you just look at one thing, and that is the subscription business, because this is what has led to all the growth. This is what led to the huge beat on sales. Analysts were expecting 32, they made 42. So huge beat. That's from the subscription service. And just about a year ago, this was a huge nothing burger. It was, 400,000 of sales a quarter. Well, now in the most recent quarter, it's 32 million, up 781% after growing 781% the previous year. So at this growth rate, what is the subscription revenue going to be at the same time next year? So there's a lot of future growth coming potentially. Also, they have these product royalties. Looks like that has fallen a little bit, or it was up 8% year over year, but it was really comparing to a whole. You also got to be careful. They are losing a bit of money. Nvidia did fully sell out of them. They lost 50 mil the past 2 quarters, but the sales growth is really the big winner here. That subscription revenue sales growth that has led to a huge beat on the revenue. What's your future perspective on COHR? Is that coherent? So I'm in at $88. It's quite cyclical. So let's check it out. I actually don't know much about this company, but we can go figure that out. Let's go. So they're in networking, materials, and lasers. Oh, so I remember this company. What's the multiple? So, it's negative. So they have this one side of the business, the networking revenue. It's growing like crazy from 2024, or this is in fiscal year. I don't like when they do that, but it's up 48%. As you can see, it just set a new record. And if we go to on a quarterly basis, it looks very nice. It's at a record. It's nearly $1 billion of revenue this quarter, up 39% after growing 30. So the sales is very strong on the networking side, but the other half of the business, materials and lasers, they're both negative year over year. So the lasers business is down by 5, or the materials is down by 5%. Lasers is down by 2% year over year. So one business is growing, but when we average out those two halves of the business, the total sales are up by 16. So still double-digit growth. The net income went negative, but this technically was a one-time adjustment because they really made around 100 mil of net income. So this operating profit looks great, up 90% year over year. Balance sheet looks pretty good. So actually, I like COHR more than I dislike it. Cash from operations fell 19%, but yeah, I really like the growth of this networking business. So I think investors just aren't too happy with these two halves of the business. We'll see what happens. But yeah, they had actually, you don't really look at the EPS right there. So yeah, not too bad, actually. I do like them. They should be making over 100 million of net income a quarter when we look at that operating profit. UNH and Eli Lilly. Yeah, let's look at Eli Lilly, actually. We already looked at UNH. We might look at them again if someone wants, but let's look at Eli Lilly stock. So this is probably my favorite, probably the safest healthcare play out there. So they sell a bunch of different prescriptions. I wonder if I can pull that up. So yeah, they sell a bunch of different prescriptions like Zepbound. This is the Ozempic competitor. This is their weight loss prescription. They legit have the ability to just create these products out of thin air. Like they created this one in 2023 Q4. It was 175 mil of sales. Now, in legit just 2 years later, it's 2.3 billion of revenue just this quarter, a 350% increase. This part of their business didn't exist 2 years ago. Now it's 19% of the entire company. Also, look at Mounjaro, for example. This is their main winner. Another product they created out of nowhere in 2022. We look at their first quarter, it was 16 million of sales that quarter. Now, just in 2 years, it's 3.84 billion just this quarter. Ridiculous growth rates in the middle. Like you can see the year-over-year growth rates in the middle. It's absolutely ridiculous. And it's done wonders for their profits. Like in sales. Sales are up 37, profits are up by 61. They made basically 6 billion of after-tax net income plus this quarter. And you get a near 1% dividend. Eli Lilly is a beast. They are a beast. What is the tool you're looking these up with? Hey, I'm just on a brokerage right here where you get stocks. It's my favorite one. Best tools, lowest fee. It's in the link tree in my bio, the very first link there. My favorite brokerage. It's just a brokerage called Moomoo, or you can just type it into Google. But yeah. So what up, George? He said ASTS. What up? So ASTS, I don't love this company right here. Out of all the space stocks, I love Rocket. I like Rocket Lab more, but let me analyze this one. I haven't looked at them actually in a while. So we look at the revenue right here. So yeah, this is a revenueless company right now. Or I mean, the sales were $1 million this quarter. So do beware, the sales were $1 million and they lost 135 million of net income. I mean, just when we analyze this from a numbers point of view, this doesn't look great. $1 million of revenue, all for a business that lost 135 mil in net income, 60 mil last quarter, 300 mil. So I'd be careful with that. Let me see. How's the revenue? Okay, actually, the next 2 quarters are very crucial. Look, the sales were $1 million this quarter. Analysts were expecting 6 million, but next quarter it's supposed to be 25 mil and 32 mil. So actually, heavily watch the next 2 quarters for ASTS Space Mobile. There might be something there, but I would still be very careful from those net income losses and just. They've been missing, like they were expecting 6 mil this quarter. They only reported $1 million. Hopefully they don't miss. But yeah, hopefully that was helpful. Just from a financial point of view, they're obviously big on momentum. So Geo said Costco stock. Yo, this is one of the most well-run like grocery stores out there. Great management team, just great business model. You have to have a subscription to get into the store. Whether you go to the store or not, they're collecting that monthly income. Also, whenever you go there, consumers feel like they're getting a good deal because you're buying stuff in bulk, or you do get a good deal. So the businesses, they have an incredible amount of sales, 63 billion of sales. It's hard to grow this number, law of large numbers. So I don't mind it being single digits. So sales are up by 8%. They print money, close to 2 billion of after-tax net income a quarter. You get a 0.5% dividend yield. Sometimes they do special dividends. I just think Costco has too high of a PE to buy right now. I actually think a grocery store that's at a great valuation right now, only up 0.8%, you can pretty much get into the same cost as me, is a Sprouts Farmers Market. This is a healthy grocery store, and they have just had immense pricing power. They have incredible net margins, abnormally high for a grocery store. So Sprouts Farmers Market is cool. Okay. What up, Ed Music? Yeah, no problem, George. I appreciate that. It's Will AOTG stock. Wait, check out the holdings of AOTG. Let's see, AOTG. Let's see. So, oh yeah, this is an ETF right here. So that's what you mean. So yeah, if we go to the fund right here, we can see its top holding. So if you buy AOTG, here's how it breaks your money up for you. If you put $100 in, $10 goes to Nvidia. And then the second largest holding is Toast. That's very interesting to me. So $7 goes to Toast, then AMD, then Alphabet, then Amazon, then Microsoft, then Robinhood. I love all these holdings. I legit own so many of these companies. I own Toast, AMD, Google, Amazon, Robinhood. I love NU. I love Shopify, TSM. This is a Nathan to approve ETF. What's the expense ratio though? So yeah, actually, realistically, I'd rather buy the QQQM than this, but the 0.75% expense ratio is a bit steep. So do beware of that. But I love the holdings. Okay, so DLO, APLD. What's DLO? D local. Oh yeah, then we can look at APLD. That's a stock owned by Nvidia. They're seeing a lot of benefits from the Nvidia ecosystem, but they're a $4 billion company here. DLO stock. Looks like they've had some momentum on earnings. They gapped up and then they fell. Let's go see how they did. So a nice beat on revenue. So check that out. They were expecting 229. They reported 250. They beat on net income and they beat on EBITDA. Very nice quarter. I can see why they jumped up. So do beware of where the revenue comes from, though. So notice you don't really see the U.S. on here. So, it's other countries, then Brazil, Mexico, Egypt, Argentina, Chile. So do beware, none of the revenue really comes from the U.S. It's like an international transactional company, but the growth is great here. Like sales are up by 49%. That really beat the analyst expectations. Operating profits up 88. Great quarter for them. Okay, so APL, yeah, the expense ratio was a bit high. Do you have any quantum stocks? But yeah, I got Google. Google obviously isn't a pure quantum play, but they're going to be they have the money and the talent. They're going to be the industry leader for quantum. I think Google already is the industry leader for quantum. But obviously it's not a pure play. Yo, what up, C-Bash? How's it going, man? Hope you're having a good Saturday. So if we go back over here to the Nvidia portfolio, one stock they own is actually APLD. And APLD has just seen a lot of benefits from the Nvidia ecosystem, specifically a huge partnership with CoreWeave. So let me see if I can find any of that news. Executive announced share sale plan. That's not good. So yeah, check that out. APLD finalizes major lease agreement with CoreWeave for an AI computing facility. Anyway, pretty cool. The stock is owned by Nvidia. Just because Nvidia owns something, though, doesn't mean you should. You should always go do your own research on them, of course. They aren't making money right now. They lost 50 mil, 100 mil. So do beware of that. But they're interesting. I got to do more research on them. What's the app name? Yeah, hey, Jackson, by the way, if you want to get this app that I'm on, it's a brokerage. It's in the link tree in my bio, the very first link there. Or, yeah, you can just go on Google and type it in. It's just called Moomoo. It's my favorite brokerage. I also have Webull and Robinhood and all these other apps, but that one's my favorite. So, yeah. If you want to get this app, link tree in bio, first link. It is an affiliate link, full disclosure, so we'll both actually get some free stocks. Yo, K-Do, what's up, dude? Hope you're having a good day. Good to see you. Long time no see. I know you own Main. Are you still adding, or do you think it's a little too high? Yeah, I'm not adding to Main Street Capital. I do think they're at too high of a price, over $65. Over 65 is a for sure. In my opinion, you don't buy it over 65 ever. But that's they're still a cool company. I really like them. This is one of the few stocks that actually pay a monthly dividend. So check this out. If you own one share of this, for every share that you own, you get paid 25 cents a month. So since I own 7 shares, I get just close to $2 a month. But here's how we can tell if the dividend's safe. Again, they pay you 25 cents a month. That's 79 cents a quarter. So they have to at least make 80 cents of EPS. And as we can see, they're making over $1 of EPS a quarter. So they can easily afford the dividend. They also have room to, do share buybacks, do special dividends. They have been doing sometimes special dividends. Sometimes they pay twice in 1 month. Is Disney the next Netflix? Yeah, I don't know. YouTube TV is kind of in the next Netflix. Did you know specifically YouTube TV, not like normal YouTube, but YouTube TV now has more hours watched than Netflix does, or like per average month or whatever stream hours. Okay, probably just because it's free though, but why is it your favorite broker? Yeah, just because of how useful this is. If I go to Robinhood, for example, this is a very nice, simple brokerage, but you got to go elsewhere to really do analysis on a company. But this is like the all-in-one app. You can see all the super investors' portfolios. There's a nice community where you can chat with other people, see what other people are saying. A lot of people post their like returns and stuff. Hey, if you want to follow me, here's my profile. You can see my pay portfolio. Anyway, yeah, it's my favorite app right here. Favorite brokerage. If you want to get it, Linktree in bio, very first link there. So let's keep going here. Sorry. UVIX. Let's check out this one. UVIX, 2x long VIX futures ETF. So this is a inverse volatility index. So whenever there's volatility, this is at an all-time low. So again, these get crushed in a down market just because they're leveraged, and you can't recover the losses at the same percent that they fell at. So yeah, basically, I'd be super careful with this one. You just buy it for volatility. You'd short-term swing trade that. You wouldn't really want to buy and hold that. I think YouTube TV is ridiculous with unskippable minute-long ads. Exactly. That's how Google stock is at all-time highs. That explains it, the unskippable 1-minute ads. Yeah, congrats if you own Google, by the way. They own YouTube, and Google bought YouTube for $1.1 billion. Like decades ago, or 2 decades ago, or whatever. They bought YouTube for $1.1 billion. It's now worth easily over $400 billion of their market cap, just YouTube. It's ridiculous, and they're like a close to $3 trillion company, but crazy. All right. Uber stock. Yo, Uber, I love this company, dude. This is one you just want to buy and never sell. They're continuing to grow. Like we can see their monthly active users. They have 180 million monthly active users, consumers. So they're actually consuming the product. The 180 million is up from 156 million same time last year. So very nice growth. Here's the Uber Eats business. The delivery revenue, which is Uber Eats, is up by 25% year over year. After being up 7, after being up 13, it just continues to grow. So people are using Uber Eats more than ever. Also, the ride sharing, the mobility revenue is up by 18, after being up 25, after being up 37. Just very nice growth, and not just growth of the sales, but actual profitable growth. Free cash flow. They made 2.5 billion of free cash flow, up 43%. They're making over $1 billion of net income every quarter. Uber is actually a monster. They don't own any cars, but they collect a little fee every time you do. What app is this? Yeah, hey Chris, again, Linktree. If you want to get this app I'm on, it's actually a brokerage where you buy stocks. It's in the Linktree in my bio, the very first link there. It's my favorite one. It's an affiliate link, full disclosure. So it's free, but if you end up depositing, we'll both actually get a little fractional share of Nvidia. So what was this stock? PDD and RGTI. Yo, yeah, let's do it. So here's PDD. You've heard of this stock before, but you've probably never heard of the company. So this is the company that owns Temu. So we'll look at Nebius. I like Nebius too. So if you've heard of Temu before, this is the actual company that owns it, which is pretty insane. We can see their active users, 751 million monthly active users, and somehow they print money. And this is in USD. They're making 3 to 4 billion of after-tax net income a quarter. So just ridiculous net income numbers. The sales are up 8% after growing 85% when Temu was really blowing up. So yeah, anyway, great balance sheet. They are Chinese, so you do have to pay an ADR fee. Do beware, but Yeah, they're interesting. I kind of own the American version of them. I got Amazon, Amazon, but Temu's still huge. Okay, should I sell Tesla or wait? Yo, I actually I would sell it here. I would just move it to another company that looks better. So Nebius, though, let me get to Nebius. You know who owns Nebius is actually Nvidia. So if you go to the Nvidia portfolio, 3% of their entire holdings are at NBIS and Nebius. And again, just because Nvidia owns a stock doesn't mean you should. You should always go do your own research on a company. And when we go do our own research on Nebius, I can see why Nvidia likes this company so much. They have had some ridiculous growth. The sales legit were nothing a year ago. 14 million, but they went from 14 mil to 100 mil. That is a 7x increase in the sales. And guess what? This was a record quarter, 105 million record quarter. The analysts are expecting them to continue that growth. It's going to be 157 mil and then 162 mil. So the growth on Nebius is just nuts. So I'd watch for the next 2 quarters particularly. Is this app accessible for EU? It might be, might not be. I don't know, Chris. I know it's available in US, Canada. I'm not sure, Chris. But maybe you can find out. I don't know. So someone said Snowflake. What up? Athene said Snowflake. Let's do it. So this is kind of like a Palantir competitor. They had some good earnings. They narrowed their losses. Like one thing analysts were really concerned about is the net income losses on Snowflake. So they actually had a good quarter. They beat on revenue, they beat on the net income losses, and they beat on EBITDA. So it was a triple beat quarter. But here's the bad news. Look at these net income losses. They're losing 300 million or sometimes 400 million of net income a quarter. But this quarter was great because the losses are narrowing faster than analysts even expected. So that's great news. The sales are super growthy. That's actually the best part about Snowflake. If you're wondering what's the best part, it's their product revenue growth, which is up 20. It's almost at $1 billion quarter. It's up 26% year over year after growing 33, after growing 49, after growing 84. So it just hits a new record every year, every quarter. Super in demand product that they have. But because they're stock-based comp, they're burning through a couple hundred mil of net income a quarter. I wouldn't buy them here at this price. I'd wait for them to go lower, but I do like them. But yeah. Hey, I forgot to talk about them. Yo, JVM, you still here? Let me know. We'll look at Taiwan Semi if you want me to. This live is useful. Hey, thanks. I appreciate that. And by the way, if you hit the follow button, I really appreciate that. Watch out for people impersonating me, though. This is my only account. I'll never follow you, DM you. I don't sell anything. I have no course, book, none of that. WhatsApp, Telegram, nothing. I don't got any of that. So someone said FDX. Oh, and MicroStrategy, BBAI. Ooh, Big Bear AI just had, actually, let me cover this one real quick. I would stay away from this one just for this reason. So remember this whole company you're buying. This is just a momentum play right now, but when we analyze them from a financial point of view, I can't trust this one. So they're a $1.85 billion company. And here's what you're buying. You're buying a business that just lost 200 mil this quarter, which is over 10% of the entire market cap. So just this quarter, they lost nearly 15% of their entire worth as a business, their entire market cap. Then last quarter, they lost 70 mil and then 150 million. And all that net income losses, all for a business that the sales declined by nearly 20%. The sales are down 18%. That's the lifeblood of the company. So they're not growing. If you're wondering what happened to their balance sheet, they just diluted the life out of you. They've diluted you by $300 million, $65 million last quarter. That's how, actually, that was actually smart of them, I will say, because they took advantage of an overpriced stock and they fortified their balance sheet. They beefed up this balance sheet, which is great news. And they kind of needed to because they lost 230 mil of net income. That's rough. So yeah. Anyway, that's BBAI. Do you have a degree? No. Hey, I'm in college right now. Yeah, I'm not an expert. None of this is financial advice. I'm not an expert. So, and I don't sell anything either, of course. So, hey, thanks, William. So, hey, and thanks for subscribing, George. Yeah, the best way to support me, by the way, if you do want to support me, the best way is just subscribe to my YouTube channel. That's the only thing I have, my only other account. My YouTube channel is called Nathan Robert. I'm also streaming on there, so if you missed anything, you can replay it, watch it on there as well. If you got any stocks you want me to look at, let me know in the chat. I'll check them out for you. I try to go pretty quick with each one here out of respect. Yeah, we could look at UNH after this too. So here's ETH. This is ETHZilla. Man, what a funny name. So Ethereumzilla or something. Do beware, they're only worth $300 million. So that's a very small market cap. And the revenue list. So it's a $300 million company with no sales. So that's why when we click on the revenue right here, it says no data because they've never sold anything, not a product or a service. And they're not losing that much money, but they are losing $1 million or so a quarter. Pretty decent balance sheet. Not great, but I would just be super careful with this one. It's a revenue-less company. They legit have no sales. So that's the thing. What are you in college for? Yo, finance. So let's go to UNH right here, United Healthcare. If we go to the Buffett portfolio right here, Buffett is a super investor. We can see all his trades by SEC law. And if we go to his newest positions, he just bought for the first time 5 million shares of UNH, United Healthcare. And Warren Buffett, he's the kind of man, he doesn't buy a stock unless he really does his due diligence. And so that's kind of why the stock rallied. That's the only reason the stock gapped up on this day is because it was disclosed that Warren Buffett bought the stock. It was kind of a surprise. Why would Buffett buy it? He must see something in the business. But here's why I wouldn't buy this one here. Actually, I wouldn't buy this one over $300 at all. I would buy it sub 300. I hope it doesn't, but I'm almost certain it's going to go back under there. So don't chase it here. But you get a 2.7% dividend with this company. The dividend is kind of at risk in the future because analysts are even expecting in 2 quarters for them not to make enough net income to cover the EPS. That's the whole reason the multiple has collapsed. It's pretty much priced in at this point. That's why the net income multiple is a 13. That's because the future's so uncertain. And also, we're a customer. We use their OptumRx. The OptumRx business is up 19% after growing 13, after growing 15. That might be why the government's not too happy with them. I mean, how does their sales in 2020 go from, 35 bill to 133 bill? And that's just the OptumRx business. You won't believe the UNH business. They have crazy numbers for the full year 2024. It did a $300 billion in revenue. So crazy growth company, but it's the margins and the government regulation headwinds that has led to the multiple collapse on UNH. But it was really cool to see Buffett buy into the company. So yeah. Oh, what up, old head? He said Galaxy. That's been one on my watch list. Let's do it. So GLXY. How can I invest my money on oil? I like ExxonMobil, Chevron, ticker symbol CVX. Those are some good oil plays. Oil stocks usually have good dividends. But yeah. I'm not sure what you mean there. How can you got to have a brokerage first of all. If you want to get a brokerage, you can just get this one I'm on right here. It's my favorite one, the number one I'd recommend. It's in the link tree in my bio, very first link there. But let's go look at Galaxy Digital. I'll help you out there in a second. But here's an $8.84 billion company. Let's go analyze their financials. They just IPO'd, so do beware. They just IPO'd in May of this year. So we probably won't have too much financials to look at. So 99% of the revenue comes from digital assets. So I'm guessing they're in some sort of cryptocurrency related industry. Look at their balance sheet. I wonder if those were IPO fees or something, but we don't have too much data for the company, and the data we do get says the sales are down by 2.5% year over year. They are making net income though. I just got to do more research on this company, so I'm not too familiar. Digital assets and data centers, self-custody. They must be some sort of crypto or brokerage. So yeah. Okay. Can you look at our stock, HOUR? So Our Loop, haven't heard of this one before. Very small market cap, by the way, only worth $128 million. So do beware, that's a tiny market cap, but they were up 93% on Friday. So I wonder, what was this good news for them to rally up so much? I don't know. Our Loop skyrockets in a meme. I want to know the news, but I just don't know. And without that news, I can't really give you much analysis on this company. Looks like the sales are down year over year. They are making net income. So I don't know. There's some sort of news. Yeah, all the apps I'm using are in the link tree in my bio. First link there. How accurate is the data given? Yeah, all the data they get is from S&P Global. So very accurate. Always you could double check it to another brokerage, but I've done that all the time. I'll compare these numbers to another app's numbers, and they're the exact same. So yeah. Let's see here. Astera Labs, ALAB. So, and the new iPhone. Yeah, the new iPhone looked pretty cool. Uh, so here's Astera Labs, ALAB. This stock is at an all-time high, and they deserve to be at an all-time high. Here's why. Normally, if you just look at a company's financials, it usually explains why a stock is either doing really good or really bad. And, these are the kind of financials that justify this all-time high price. Check this out. They beat the analyst expectations like crazy. The sales are up 150% year over year after growing 600%. You can just literally see the revenue just hits a new record every year, every quarter. And out of this 191 million of revenue, 51 million of it was net income. This is great net income positivity. They also have an absolute monster of a balance sheet. So look at this. They have over $1 billion of cash now. So $1 billion of cash with no debt on the books. So that's just like a huge safety net, that gives them a lot of freedom. They can do whatever they want. They have $1 billion of cash, no debt. Their cash pile's growing thanks to their net income. So Astera Labs is great. The valuation is probably a little too high to buy them now, but they're still great. Definitely early to buy, close to 20. Thanks though. Hey, yeah, no problem. Headed. Yeah, sorry I couldn't give you more thoughts on Galaxy. They probably are. They might be a Bitcoin proxy. So if Bitcoin's doing good, maybe they're doing good. So yeah, the iPhone 17 looked pretty cool. I wonder if that'll bring a lot of sales to Apple. So someone said UPS and DBS. I can't find DBS stock. Unfortunately, unless you're talking about the Singaporean company. So here's UPS. Unfortunately, I believe this stock right here is or has an unsustainable dividend. So here's how you can do this math for yourself, and here's how you can check. So, and I'll show you the numbers for yourself. You can draw your own conclusion, but check out this yield right here. You get 7.7% of your money back every year just from a dividend with this company. But look at the payout ratio. It says 95%. So they're spending all their net income on dividends. And here's the bad news. Their average daily parcel volume fell by over, 5% year over year. Not great. But here's the worst part. They made $1.28 billion this quarter, $1.2 billion last quarter. So they made $1.3 billion of net income this quarter, and the dividend cost $1.35 billion. So they need to at very least make $1.35 billion to afford that dividend, and they couldn't afford it the past 2 quarters. That's why I think this company needs a healthy dividend cut. So even though this company, made over $1 billion of net income, of after-tax net income, they didn't retain any of it. It literally over 100% of all this net income was paid out to a dividend. So they didn't have any leftover cash to do M&A or buy back shares or reinvest in the company. They had no leftover cash. So that's why I think investors have been disappointed with UPS. And as you know, as the share price goes down, it makes the yield look higher. So I just think that one needs a healthy dividend cut. So Snapchat stock, I forgot they were public, but Snapchat is publicly traded and they just cannot get profitable for the life of them, man. The price is lower than when they IPO'd at. They IPO'd in 2017. Stock is down from then. Here's a cool metric we get though. Snapchat actually has 469 million daily active users. Up from 432. So they're actually growing their daily active users by a nice bit. But here's the bad news. The fact that they're burning through a couple hundred million a quarter. They lost 260 mil this quarter, 140 mil last quarter. They did make net income this quarter, but then it went right back to negative. So it's tough. Single digit sales growth as well. Sales are up by 8.7. And if we look all the other quarters before this, it's always double digits. So I'd be careful with that one at all-time lows. They might continue to stay down there at that level if they don't get to net income positivity soon. I mean, they've just been burning money for nearly a decade now. Okay, let's see. DCTH, why is it in your Roth IRA? DCTH, this is a stock I do own in my Roth IRA. A lot of people question, hey, why do you own such a trash stock? All right, so I'm about to give a pitch for this company right here. As you guys know, I love looking at financials, and I normally never, ever recommend a stock that looks like this, but hear me out on this one. Here's why and again, if you find this one like, oh, that one actually does look interesting, let me buy it. You can't make it a meaningful size position, man. As much as I love this and trust it, it's a $160 position for me. Here's why I think this one's worth looking into. So look at this market cap. Remember, the stock was down 100% all time, and they're only worth 400 mil. But here's why. Out of all the $407 million companies out there, this one's worth looking into. So they're worth $400 million, and guess what? They have $81 million of cash and no debt. So they have no debt on the books, $80 million of cash. So 20, 30% of the entire market cap right now, 20, 30% of what you're paying is just their cash on hand. So we analyzed, the rest of this. Check this out. The business is finally booming. They finally have sales. They're at a record amount of sales, 24 million. And out of this 24 million of sales, they made 3 mil of net income on this. So here's a company that's 30% cash, growing their sales like crazy. That's net income positive every quarter. They're going to continue to stay net income positive as well. And because they have $80 million of cash and no debt, they're actually making interest. So they made $750,000 of interest on their cash this quarter. Most companies are paying negative interest because of the high interest rate environment. But no, since this company has so much cash and no debt, they're earning interest on their cash. The sales are growing. They're net income positive finally. And I think they're probably worth more than $400 million. They sell this liver kit. It's called a heptazo kit. That's what's, all the sales. They finally got FDA approved and are finally selling this product. So that's why I think this one's interesting. This wasn't a buyback before here. You wouldn't buy a company with no sales like this, but they finally have sales, and on these sales, they have incredible margins on them. So anyhow, 80 Reddit type gross margins, ridiculous. So and as much as I love them, and I think they're cool, they're only a $100 position for me. So don't have them as a meaningful size position, not financial advice. Nothing in this is financial advice, of course. I sell nothing. My Roth IRA hasn't even been doing too good. We're only up 4% all time in here. Here's my total percent change on every stock. We're down. Actually, we're barely up on DCTH. We're up 0.78%. Anyway, let's get back. Today's return, $7. Hey, what's up, dude? The market's not open, so I'm not sure what you're talking, or I'm not sure what that guy's talking about, but that's okay. When will Ethereum reach 4,500? Oh, Ethereum. Okay. Oh, holiday season push. BDX, please. What up, Max? So let's look at this one. Oh, should we look at TD? Okay, we'll look at BDX. And then we can look at DBS Group, one of the best lives. Hey, thanks for the subscribe there. We can look at Oklo. Oklo should not be worth 10 billion. But anyway, let's look at BDX. We'll kind of go in order. We could look at Webull too. I have a Webull account. I've probably given them a lot of transaction fees. So this is a huge company. Wow. So this is a $55 billion market cap, and they gapped up on earnings. So there was something analysts liked for them to gap up on earnings. Let's go see if we can figure out what it was. So they beat on revenue, a huge beat on net income. We'll go see if that's real or a gap net income trick, and a nice beat on EBITDA. So they did deserve to rally up. So it looks like they're in the medical sector. The medical sales are up by 12%. That's nice double-digit growth. They're in interventional. That's down by 2%. And then they have life sciences, which is down by 4%. So we have half the business growing, the other half kind of shrinking. So when we average those two together, the total sales are up by 10% year over year. Nice. And out of that, 570 million of it was net income. So they're printing a couple $100 million net income a quarter. You get a nice 2% plus dividend yield. Are they doing buybacks? They are. So net income's up by 17, but the net income per share is up by 19 because the share part of the ratio went down. So they do have a lot of leftover money for dividends and buybacks. Nice. Joined too late. Can you show the stock you were just talking about? GG. I forgot what stock I was just talking about. But by the way, if you missed anything, I'm also streaming on YouTube. So sometimes I talk too fast. Maybe it was DCTH. Yeah, by the way, if you missed anything, I'm also streaming on YouTube. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. So when the stream's over, you can even replay it back then. You can rewind. You can't really rewind on TikTok, but you can rewind on the live YouTube stream. And when the stream's over, you could replay it if you missed anything. The beginning of the streams are really fun. But anyway, let's keep going here. YouTube channel is called Nathan Robert. You can just type that into YouTube, or it's link tree in bio. I'm streaming on there as well. So let's look at DBS Group in the U.S. market. Let me know if you're talking about this one right here. You're probably talking about this DBS stock. So they are in ADR, but they're a $112 billion company. They are U.S. listed, but we're going to convert. So we're going to convert their currency. I think this is Singaporean dollars. You know what? Where are they? Where are they headquartered? That's how we can tell. Singapore. Okay, I was right. Okay, so they're headquartered in Singapore. Do beware of that. So check that out. 65% of the revenue comes from Singapore. 15% comes from Hong Kong. Greater China. So do beware, this is basically a Chinese company, but they're in consumer banking, institutional banking, and market trading. That business hasn't been doing too well, but yeah, the consumer banking and wealth management business is up very nicely to a new record. And this is in USD, take it. This is not in Chinese currency. This is in US dollars. They're making over basically 2 billion of after-tax net income a quarter. So there is some value here. $112 billion company trading at a low multiple for a bank, but they're Chinese, so maybe that's why 12 times net income. So Oklo stock, this is a nuclear reactor company that's all momentum, and I can't believe this stock is where it's at today. This one I wouldn't touch. If you look in the top right, they're worth $10 billion. This is a startup. Like Sam Altman was the original founder or whatever, but this is a startup with no revenue. Like if we go to the sales right here, says no data because they've never sold anything. They've never sold a product or a service. They're losing net income every quarter. So honestly, this is just a nuclear momentum play. If you want a company with real nuclear assets, I would buy ticker symbol. Let me pull that up actually. It's in my main account. I do own them. I might be biased, but I would buy a VST or a CEG. CEG literally owns 50% of all the US nuclear energy reactors. This is the main nuclear play, in my opinion, you want to own. But this one's high momentums, Oklo, but you can't believe that 10 bill market cap. All right. Let's see. Can you analyze SoFi and the Klarna IPO? Oh wait, let me start with this one. NTR stock, Nutrien. Yeah, what up, Roman? He said SoFi, TDG, Klarna IPO. Yeah, Klarna looks interesting because another buy now pay later stock, Affirm, it just had incredible numbers, and Klarna is another buy now pay later company. So I wonder if they'll move like Affirm does. So here's Nutrien. Haven't heard of this stock before. The stock hasn't done too well. It's the same price that it was back in 2018, so hasn't done too much. But what do they sell? They're in retail. They sell nitrogen, potash, phosphate. Most of the revenue comes in the US. So they just sell a commodity is what it sounds like. The sales are up by just 2% year over year. So the sales are up by 2%. They did make a lot of net income on that. 1.3 bill of after-tax net income. That's a great quarter. These other quarters, though, aren't great, though. 19 mil. It looks like it used to be a lot more. So maybe if we go back to another commodity spike, or agriculture commodity spike, this one will benefit. Yeah, I got to do more research on them. What's the yield? You get a 3.8% yield. They kind of remind me of like a MOS, the Mosaic company, another kind of, they sell like phosphates, fertilizer. Yeah, phosphates and potash, kind of the same thing. Yeah. Okay. TDG stock. Let me get to TDG. What is that one? Then we'll get to SoFi. I do own that one. So haven't heard of this stock before. This is Transdigm, or I probably pronounced that wrong, but it looks like they gapped down on their dividend day. A $90 special dividend. Well, that's why the stock gapped down. Whenever you see this with covered call ETFs, the day they pay the dividend, the stock falls usually that same amount that day. So anyway, they had a nice little reward to the shareholder via a $90 special dividend. That's nuts. I guess the stock price is $1,200, but that's a like 5% plus return, I think. So let's see what they do. They're in power and control and airframe. The airframe revenue is up 9%. The power and control is up 10%. So that's very nice growth, continuing the double-digit growth. So very nice sales growth. They're making $500 million of net income a quarter. Let me see. Did we get the dividend payout? How much? So yeah, they don't pay a dividend. Looks like in 2025 Q1 they did another special dividend that was $4.4 billion. Maybe was that this one? But I don't know. Anyway, that's but kind of yes. Nintendo. So Nintendo stock, this is a Japanese company, so you do pay an ADR fee, but you can buy the stock. So here's Nintendo. Nintendo stock owns 10% of Pokemon. So this is kind of the only way to get exposure to Pokemon cards or whatever, is through Nintendo stock, which owns 10% of it. How's Nintendo doing? They're Japanese, so we'll switch it to USD. Annual playing users, they got 128 million. They have that Switch 2 coming out. That was huge. Yeah, they make a lot of money. 500 mil to a bill a quarter. Okay. Thanks for sharing DSBY stock. Thinking of investing in one ahead. Hey, yeah, no problem, IDK. Stefan said the Klarna IPO. So yeah, I'm curious to see what will happen with the firm's recent good numbers. Another buy now pay later stock is AFRM, a firm, and they're at basically a new 52-week high today. They're finally profitable. 70 mil. They made net income the past 3 quarters. When if we zoom out, they used to lose a couple hundred mil. So buy now pay laters are really good, and they're also really they do terrible in a recession. They won't pay back those loans. Consumers won't pay back those loans, but the business is super growthy. Sales are up 32 after being up 47. So interesting. You got any laptop recommendations? Laptop likes. What do you mean by that, Luffy? What is this one? What's the app? Yeah, hey, TG, I'm on a brokerage right here. If you want to get this app I'm on, it's in the link tree in my bio, very first link there. But yeah, or you can just type it into Google. It's just a brokerage called Moomoo. Okay, are you investing in any IPOs? No. So the thing is, I'll talk about this with the Klarna IPO really quickly. If you do want to get the Klarna IPO, what we've seen with a lot of IPOs recently, as soon as they are publicly traded, that same day they rally up an insane amount. They go up 80%. But do beware. If you look at the middle of my screen, it says I'm aware of the flipping policy. Brokerages don't allow you, if you buy in before they IPO, you're not allowed to sell your shares for 30 days because of the flipping policy. And if you do, you're banned from buying future IPOs. So, you can still do it, but then you can't get any IPOs in the future. So it's tough. I don't like buying IPOs because usually they go up and then they crash every time. And they're usually overvalued at their IPO price. But some IPOs recently have been purposely underpricing in their IPO. That way they get that rocket as soon as they IPO. Do you normally hold companies or ever play with options? No, I don't have any. I haven't done a single option in over a year. I mainly just buy and hold great companies like all these ones that you see here. And I usually, like with some of these stocks, return 20, 30% plus a year. Like I get option type returns with some of these higher growthy names, like Reddit. Like I've owned this one for less than a year and I'm up 150%. So some of these like Robinhood, I'm up 600% on them. I regret every share I've sold to them. SoFi, we're up 3x. They move like options sometimes. But yeah, I don't really touch options. You got to time. You got to be right on your time when you do options. So we could. Oh, I forgot. Do we? Should we look at that? I don't know if that's in all brokerages, V, but it might be. Because they have that policy there, so like people don't buy the IPO and then instantly sell it. Like they want, like if you're, the point of IPO is to like just stay invested. But we could look at Palantir too. It would be great if you could analyze valuations along with fundamentals. I try to do that. So like if we go to Palantir right here, if we look at their valuation, Palantir trades at 105 times sales, not 105 times net income, not profits, but just 105 times revenue. That's really expensive. I personally am not paying that premium for Palantir, but here's why they might deserve a high premium. They deserve a high premium, but not this high in my opinion. And I do want exposure to Palantir eventually, but not at this price. But check out the government revenue growth here. A lot of police stations use Palantir's software. This business is up 49%. That's the highest growth rate we've seen in years. There's no other 49% year-over-year growth rate on the screen. So the government revenue is growing like crazy. Also, the commercial revenue with S&P 500 companies and mom and pop shops. This is up 46%, also highest year-over-year growth rate we've seen in a very long time. I love Palantir. Also, they made $1 billion of revenue, and out of that $1 billion of revenue, $330 million of it was net income. So they had the record net margin, 33% net margin. They also have an absolute banger of a balance sheet right here. They have no debt at all, a debt-free company with $6 billion of cash, up from $4 billion the same time last year. I mean, the story just keeps on getting better. Also, the FCF, which stands for free cash flow, record up 300% to 500 mil. Palantir's a beast, but valuation's too high. Okay. A Webull stock. Okay. Let's see, BULL. So this is Webull right here. This is another brokerage, like Robinhood stock. So if you look at this app right here, this app that I'm on is called Webull. This app right here, publicly traded, this is their stock, ticker symbol BULL. I worded that weird, sorry. But the Webull IPO, was so crazy. There's some good news and bad news about this company, though. So the sales are growing very nicely. The sales are up 46% year over year to a new record. So very nice sales growth, but they lost net income on this. They lost 30 mil of net income. Not the end of the world, though. I mean, they made net income the last 2 quarters, but I was really impressed with this sales growth number. They do have a bit of a complicated share structure. I believe this might be an ADR as well. I'm pretty sure they're a Chinese company. Let me verify. No, Florida. So, or they're nice. So they're cool. But I think IBKR, Futu, Robinhood, those are my picks. Like I own all the other brokerages besides them. Like I own Moomoo stock, I own FUTU stock, I got Robinhood. SoFi isn't really a brokerage, but I like them too as another fintech play. Okay. 33% isn't okay. Oh, I forgot what we were looking at there. To China. Yeah. Oh, okay. Hey, try to be nice here. Hold on. Okay. Thanks for the pointers. Yeah, no problem there. Is this live? Yeah. Hey, what up, Vital46? This is live. We're streaming on YouTube and TikTok right now. So someone said, NOK stock. I don't think we've looked at them before. Oh, this is Nokia stock. So unfortunately, this is kind of a meme company. I mean, Nokia is the same stock price that it was back in 1997. So you bought the stock in 1997. You're flat on your position. But let's see how they're doing. I am curious. So network infrastructure, mobile networks, cloud and network. How's their cloud network doing? It's down year over year. Main business network infrastructure, hey, that's up by 37%. But what about on an annual basis? So it's down from 2020. Mobile networks. So yeah, this is their annual revenue. As you can see, the business just isn't growing. Like network infrastructure at a new low. Mobile networks at a new low. Cloud and network also at a new low. So their main three segments, 40, 80, so 90% of the business isn't growing. Are they making net income at least? Not really. So to be honest with you, nothing's really blowing me away here with Nokia. You get a 3.36% dividend. The dividend like changes every year. Look at that. So I'd just be so careful. I'd rather buy Apple, So what do you think about Open? Yeah, Open Door. Oh, Kevin said, I forgot to get to this one. Oh, and McDonald's stock? Yo, I love McDonald's stock. Yo, Kevin, are you still here? Let me know. Look at REZI. So let me actually pull up McDonald's. I didn't think anyone. I've only at the time I've been streaming for a year plus. I've been streaming. I've only had McDonald's like asked 2 times. It's one of my favorite companies. But yeah, this is like the safest stock out there. In a recession, 2008. Here's the year 2008. This stock didn't dip in 2008 because they're recession proof, or I call them recession proof. They're really recession resilient. But historically, when we go into a recession, sales at McDonald's go up. People stop going to Starbucks and stop going to Chick-fil-A and go to McDonald's instead to feed their family. And so also in a recession, their sales go up. And during 2008, they also acquire a bunch of cheap land during recessions. Their sales go up. They acquire a bunch of cheap land. They're really a real estate royalty company. They own the land under 80% of all the stores. Even in a recession like in 2008, all the franchises still paid rent every month. The franchises is the bad business. You want to be the royalty in the landowner. That's why for a restaurant, this is obscene. You never hear of a restaurant with 33% gross margin or with 33% net margins. There is no restaurant with 33% net margins. That's because this is a real estate royalty company. If you go spend $100 at any McDonald's, $4 of it goes back to this company as a royalty, a legit 100% margin, sales and marketing royalty. And they're making $2 billion plus in net income a quarter. You get a nice 2.2% dividend yield. McDonald's are expensive now. I don't know if you're talking about the stock is expensive or the food, but I would disagree with both of those. McDonald's is bringing the value back. They have a $5 meal deal. They now have this they have an $8 Big Mac meal. So for $8, you get a Big Mac, medium fry, medium drink. They have a $5 breakfast meal. You get a chicken biscuit, hash brown, and a small coffee Coke for $5. McDonald's, I do agree, a year or two ago, McDonald's prices of a hash brown and certain stuff were nuts. But now with the McValue, like add one, buy one for $1. If you use the McDonald's app, you would know that McDonald's is the cheapest food anywhere out there. And hey, I am biased. I do own 15 shares of this company. And I used to work at McDonald's, by the way. I know how it works. But not for McDonald's corporate, for a franchise. But look, I own 15 shares of this company, and because of that, I get paid $26 in dividends, and they pay a qualified dividend. So even though I own McDonald's in my taxable account, that $26 I'm getting is completely tax-free because they pay a qualified dividend and is taxed at long-term capital gains. Pretty cool. Anyway, let's keep going here. Oh, hey, Kevin, good to see you. Well, let's look at REZI. Sorry, I kind of ranted on about McDonald's there. So here's REZI. This stock's at an all-time high. So first off, congrats if you own this company. You got to be up on your position. Let's go look at their financials and see if we can figure out why the huge rally. So, this kind of explains it. Look at this huge beat on analyst expectations. So this orange line from S&P Global is what the analysts were expecting. Huge beat on revenue. They had some weird net income adjustment, but huge beat on EBITDA. That's probably why the huge beat. That's insane. So the net income went negative by $500 million. You can tell that's a one-time adjustment by going to their operating profit, which was up 34% year over year. Revenue's up 22%. If this wasn't a one-time adjustment, the market would be worried and the stock wouldn't be at all-time highs. So don't worry about this huge net income loss. I wonder what the exact story of that was. But anyway, they seem pretty interesting. I don't know if I wouldn't buy them at all-time highs though, but nice. Okay. Great work. Good luck. Hey, thanks, Olhedi. Hey, by the way, if y'all wanted the follow button, subscribe button, we try to go live every single day. Oh yeah, California prices are pretty whack. MSFW, please. What's Roundhill Microsoft Weekly Pay ETF? So yeah, again, with these covered call high yield dividend ETFs, they don't really outperform the underlying assets. So if you buy this, you're not going to really outperform Microsoft. But what you do get is basically a huge yield, and it pays monthly. You get a 5.5%, or what was it, weekly even? You get a 5.5% dividend that pays weekly. So, yeah, I would still be. What's the expense ratio? These also have like, oh, come on, phone. What was it? I forget. MSFW. So usually they have crazy high expense ratio fees. Yeah, 0.99% expense ratio. So here's what I always talk about these covered call ETFs. You're buying an asset that doesn't outperform the S&P 500's 8% yearly return. So you're not getting 8% a year, and you're paying 1% of your yearly returns just in expense ratio fees. So no matter what, these covered call ETFs are tough buys. It's like a slow bleed of your capital, in my opinion. But you buy them to maximize your dividend income. You don't really. Also, people who buy them don't expect to outperform the market in the long run. There are some people that do, which is crazy. But I don't think. You just buy that to maximize your dividend income. Don't expect to outperform. Hey, what up? Bailu said KSPI. So I haven't heard of this. This is Kaspi stock. Let's go see what they do. So first off, what currency is that? Is that like Kazakhstan's currency? KZT. Well, let's go see where they're headquartered. Yep. Okay. Let's go see what they do. So first off, look at where all the revenue comes from. Kazakhstan, I can't even pronounce that word right, but sorry. That's where 99% of the revenue comes from. Then a small amount comes from Ukraine, but this is what they do. So they're a marketplace, they're a fintech, payments. How's their fintech business doing? It's up 10% year over year. That's great. Marketplace revenue. Wow. Look at the marketplace growth, dude. It's up 150%. That's incredible. These year-over-year growth rates in the middle are absolutely ridiculous. So this company deserves, I wonder why they're struggling so much then. Maybe it's just the country, but the revenue growth looks great. Oh, the net income declined year over year. So that might actually be why the stock's struggling. The margins, look, the sales are up 57, but the net income declined. That means the margins collapsed. Yeah. They used to have 44% net margins. Now it's only 26. That might be why investors are too happy. You get a nice 4% dividend yield though. But hey, thanks for that, Fred. Yeah, if you want to get this app I'm on, it's in the link tree in my bio. Very first link there. It's my favorite one. It's a brokerage where you buy stocks. Link tree in bio, first link. So, Blackstone stock. What's the ticker symbol for Blackstone? I know BlackRock is BLK, but I don't know Blackstone. They're another kind of asset manager, kind of like BlackRock. What up, Vital? He said, thoughts on JBS. What's this one? So, JBS NV. So, let's check this one out. Oh, yeah, we can look at United Healthcare, NUVB. What up, Daniel? Remind me to look at NUVB. Uh, so here's JBS. So they're a $17 billion company. So they're a Brazilian company. So another country you probably have to pay ADR fees on for owning. But looks like they sell beef, Pilgrim's Pride, pork, United States. So it looks like they're in the commodity. They just sell meat and stuff like that. The sales are growing nicely. Yeah, the sales are up 23% year over year. They made a good amount of net income. They're making 600 to 700 million of net income a quarter. That's up 75%. That's very good. That means they're growing their margins faster. They have very low margins, 2 to 3% margins, but it's good to see they're growing them. Whoa, okay, this might be unsustainable. A 9.2% dividend yield. Is that right? So here's how we can tell if they can afford the dividend. So here's how much they made this quarter, 630 million of net income a quarter. Here's how we can check how much the dividend cost. The dividend, okay, so they must have been doing cost 1.25 billion, but it's not consistent. So maybe they did a special dividend. I don't know. Oh, their dividend changes every quarter. So anyway, that's an interesting one. VOO SPLG, which is better? To be honest with you, they're the exact same. Your difference in the long run over 10 years will be less than 10%. So it's just pick one and don't really worry about the other one doing better. But yeah, both are just S&P 500 ETFs, and they just break your money up for you into the top companies like Nvidia, Microsoft, Apple, Amazon, Meta, Broadcom. Yeah, Broadcom just has been crushing it. Or that's Meta I just clicked. Where's Broadcom? They had a great earnings report. Yeah, look at them on Friday. So up 9.4%. They got OpenAI as a huge customer. That's actually why Nvidia fell. Nvidia lost OpenAI to Broadcom, which OpenAI is one of the largest customers. Like OpenAI would use Microsoft, who would then buy Nvidia chips specifically for them. Okay. Oh yeah, NUVB. Let's do this one. NUVB. Let's see. So this is Nuviation Bio. Never heard of it. They're a small company, a $1.3 billion market cap. It looks like they've really been rallying, like especially the past 3 days. I wonder if there was some sort of specific news here. Any comments here? Nope. But let's go see their financials right here. So oncology development activities. Oh, check that out. The analysts are really growthy on the sales. So the sales are expected to go from 4 million to 17.9 million. So that's really interesting because this was basically a record quarter, 4.8, supposed to go to 15. They are losing a lot of money, like 200 mil of net income a year. So to be honest with you, I'd be so careful with this one, a $1.3 billion company with basic. The next 2 quarters are going to be crucial, but the analysts are expecting them to continue to lose this money. They're losing like 20 to 30% of the market cap a year. It's tough. I'd be so careful. Hey, what up, Looney? Yo, no way. Shout out to the homie on the YouTube stream, Looney, one of the members, one of my 2 members. Let's see. He said DGRW. Yo, by the way, best way to support me is just watch the stream from YouTube. I'd rather you just watch the stream from YouTube than donate me money. Just so my YouTube channel is called Nathan Robert. I'm streaming on there. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. But here's DGRW. What is this one? So this is dividend growth ETF. Here are their top holdings. This looks kind of like an S&P 500, but then look, their third largest holding is in oil. It's in ExxonMobil. And then they have Home Depot, Procter & Gamble, then Chevron, PM. So that's really interesting. Those are a lot of the higher yielding plays. And then DGRO, what is this one's top holdings? This one owns Apple, then Johnson & Johnson, Broadcom, Exxon, Home Depot. So kind of similar holdings. They share a lot of similar top 10. So yeah, they should probably perform similarly. What is Broadcom about? Yeah, Broadcom's a huge semiconductor play, and they have a huge software business growing like crazy. Yeah, Broadcom is like, what's their market cap now? $1.6 trillion. They're huge. The next Nvidia. And check this out, a lot of people know them for their semiconductor solutions, but one of the main growth drivers has really been their infrastructure software. Like just a couple years ago, it used to be nothing, or not nothing, but it was 2 billion a quarter. Now it's rocketed up 6.6 billion this quarter, and that's done great wonders for their actual numbers. Like the free cash flow was 7 billion, up 50% year over year. The net income was 4.14 billion. I mean, they're making 4 or 5 billion net income a quarter. Sales are up 22. Free cash flow is ridiculous. You get a near 1% yield. Broadcom is really cool. Oh yeah, hey, let's see here. I keep on forgetting to get to these stocks. I do apologize. Um, Open Door, where are you getting all this info? Oh yeah, hey, I'm on a brokerage right here. It's in the link tree in my bio, very first link there. It's where you buy stocks. It's my favorite one. Yeah, so link tree in bio, first link there. Or you can just type it into Google, just a broker called Moomoo. But yeah, I had no idea about Broadcom. Maybe I should start it. I'd be careful at this valuation. They did just hit an all-time high there, V, but they are pretty interesting. Can you check out Fly? Is it a must to invest in crypto, or stocks is not? Stocks is enough. I don't actually own any crypto. I can get some crypto type returns through great dividend or just great growth stocks like Reddit, Robinhood. Robinhood kind of moves with crypto, since so much of Robinhood's net income comes from crypto transaction fees. They sometimes usually trade with Bitcoin a bit. They kind of rhyme together, and then some of these other names. But anyway, I kind of regret not owning Bitcoin because Bitcoin's been going nuts recently. But here's Open Door Technologies. This is the company that they just flip houses. Quite frankly, they're not good at flipping houses, but this company is momentuming on the hope of a lower interest rate environment, because look what happened last time we went to a low interest rate environment. In 2022, rates were zero, handing out free money. And check this out. They're making, or they were making, 4 to 5 bill of revenue a quarter. But then as interest rates ticked higher, look what that did to their sales. Went under $1 billion. So they're super interest rate sensitive, and the market's pricing in with 90% certainty that in less than 25 days, interest rates are going to get cut. So, we're seeing an interest rate cut very soon. But I wouldn't buy that one here. I think they're all momentum. So what do you think is up in? I don't know what you mean there. Oh, as an up and comer. Okay. It's tough to buy anything right now. The most recent stock I've bought was CRMD in my Roth IRA, CRMD stock. But all the stocks I want to buy have already gone up too much. Like Amphenol Group, I did buy another share of Amphenol Group at 107. That's the company supplying the copper cables to Nvidia, and Nvidia's new NVLink spine product uses over 2 miles of copper cables supplied by Amphenol. They're also an aerospace defense company. They're in so many industries, but their communication solutions business has grown so much thanks to Nvidia. So Amphenol's a really cool company. Comfort Systems, this is an HVAC company, heating, ventilation, air conditioning company. A lot of their growth has literally come from the technology sector, data centers, and Bitcoin mining rigs, which it's been recently unpopular for them to use water cooling. There's been a lot of concerns of like data centers just draining water. Like I saw some like one ChatGPT search uses about one, like your basic ChatGPT search, it's not even like deep research, uses a bottle of water worth of water. So this company does, they install the like cooling pipes right into the server racks. They're pretty cool. Another stock I've been just loading the boat on, or you can just kind of see all these little buy orders is where I've been buying the stock. Coca-Cola Consolidated, the bottling company. Great. Okay, so let's keep going here. Fly. Oh, I forgot to get to that one. My bad there. He said FLY is an aerospace company. So yeah, ticker symbol FLY Aerospace. Looks like they just IPO'd in August 2025. So let's see what they sell. The revenue growth is fantastic. Again, they just IPO'd, so we legit just have 1 quarter of data. Yeah, 1 quarter of balance sheet data here since they just IPO'd, but the sales went from 8 million to 55 mil. That's phenomenal growth. Market leading space and defense technology. Reliable space launches, okay, I gotta do more research on them, but they look interesting. I like the sales growth there. Procter & Gamble, please. Let's do it. PG stock. Procter & Gamble, and then we can look at GE&I. Nvidia Semiconductor, that one's not great. How do you usually research stocks? I always research stocks from a financial point of view, make sure they have good financials, good fundamentals, and kind of just the way I've been analyzing stocks this whole stream. And I have a YouTube video on how I fully analyze a stock if you want to check it out. I have no course. I sell nothing. I have no course, book, Discord, WhatsApp, Telegram. I don't sell nothing, but I have YouTube videos where I show how I buy stocks. If you want to check it out, YouTube channel is called Nathan Robert, Linktree in bio as well. But here's Procter and Gamble, one of the best, consumer staple companies out there. There's some technical analysis, double bottom. The app is saying there's a 92% chance it'll go up after this, but they own so many. Internet says it's going down. That's not good. The stream ends. Oh, dude. Oh, okay. Hey, if it's lagging, it's not your fault. It's my fault. So, and by the way, if you want to hit the follow button, we go live every day, twice a day. Okay, it says we're green. Okay, we're good. We're back. Okay, here's Procter and Gamble. So this company owns so many billion-dollar brands like Tide, Old Spice, Gillette. So, and they're so diversified. Like they're in fabric and home care, baby, feminine and family care products, beauty products, healthcare. Most likely you use Procter and Gamble products almost every day, or every so often. And here's why the stock has kind of been struggling for a while. The sales aren't growing too much. The sales are up just 1.7%. So the sales are up 1.7, but they print money. Okay, Wi-Fi. All right, I didn't want to end the stream here, but I might have to. That sucks. Okay, oh wait, it says we're good. Okay. All right, if the Wi-Fi goes out again, I might have to end the stream, so sorry. But if y'all wanted to follow button, hey, we've been streaming for 2 hours and 14 minutes, so I'm starting to get a headache a little. But check this out. They're making a lot of money. They're making $3 to $4 billion of net income every quarter. They legit print money, and they share a lot of that with you via dividends. You get a 2.5% dividend yield with this company, So this is a really cool stock that I think is a great never sell. Like you just put them in the Roth IRA, or you just buy them and forget about them. So GENI. Hey, thanks, Looney. Oh, progressive stock. Let's do it. Kind of lagging. Yeah, hey, IDK, it should be good now. It says we're fully good, so there should no longer be any lagging. But if you did lag, it was my fault, not yours. It says we're fully good. Okay, so here's Genius Sports. I haven't heard of this company before, but looks like they've been rallying very nicely, at a new 52-week high on Friday. We can't really cover what they do, but if you kind of read right there, you can kind of, that's the industry that they're in. I can't really cover what this company does, but I can see why the sales are up 25%. They are still losing net income every quarter, so do be aware of these net income losses, but looks like the sales are growing nicely. So here's a stock I do own that I think is at a good, reasonable price to buy. So if you look at the S&P 500, a lot of, almost everything in my portfolio right here, I wouldn't touch at these prices. I wouldn't buy anything. But one stock I would buy and have been buying at this price is ticker symbol PGR, and I'm down on my position. I own 3.8 shares of them, and I'm down 1.6%. This is Progressive Corp. It's an insurance company. You've probably heard of them before. Here's why I think this stock is just going to go back to an all-time high very soon. Their personal lines business is up 23%. So their premiums are up 23% after growing 22%. After growing 42, after growing 7. So the growth has been monstrous on here. Also, the commercial lines also at a new record. And it's not just the revenue that's growing, because the revenue's up 21, but the net income is up 117. It's up to $3 billion. They're making $2 to $3 billion in net income a quarter now. What's the margin? They had a most profitable margin quarter ever, near 15% net margin. Progressive Corp is just a beast. And also, they do every January a little special dividend to reward the shareholder. Like, check this out. They normally pay you 10 cents a quarter, but then on January, they paid you $4.50 as a special dividend to reward the shareholders. And last January, it was only 75 cents. So, again, normally pay 10 cents. They did 75, then $4.50. Now that they've had the most profitable quarter ever, they're going to give you another, I think, record special dividend next January. That's one I think you're like incentivized. Just buy and hold them forever. Just don't sell them. I think they're cool. Okay, so MLP, is that actually a ticker symbol? So Maui Land and Pineapple. Okay, so very small one, a $330 million company. So they're in leasing and land development and resort amenities. Well, let's just go to the total revenue here, see how the sales are growing. So sales are up very nicely year over year, but they're very small numbers. $4 million of revenue, but the revenue grew 73%. So 4 mil of revenue up 73, and they lost 100,000 or no, a million on it. So they're really not losing that much money, but the numbers are just so small here. I'd be careful. I mean, they're in leasing, land development. The leasing revenue is up 45%. Maybe that'll do good in a lower interest rate environment, but they're just so small, so tiny market cap. I'd be careful. So JB said, what's your opinion on Target entering okay, so the thing with Target is this is basically a dividend play right here. A lot of people who used to be Target shoppers that I know aren't really Target shoppers anymore. They kind of lost the spark there, but they kind of went woke a little too. But here's why I think this one might be worth looking into as a play now, because they have a nice yield. You get a 4.8% dividend. So no matter what, even if the stock falls every year or falls a couple percent, you're still getting paid that 5% yearly qualified dividend. And here's why also Target is being hurt so much more than your average grocery store. Because if you look at Walmart, Costco, Sprouts Farmers Market, all these other grocery stores, they're doing good, but this one is less of a grocery store than all those other ones because they have more discretionary products like household essentials, apparel. 16% of all their sales come from apparel like clothing, and then home furnishing and decor products, hard lines, beauty products, chapsticks and makeup, whatever. So more discretionary products, and the business is down year over year. The lifeblood, the sales of the company are a negative 1% year over year. But here's how we can tell if that 5% dividend is safe. Also, the margins are falling too. Net income is down 21, so the margins fell 20%. Very low margin business, 3% net margin. But here's how we can tell that the dividend is safe. So they're making we'll give them the benefit of the doubt. They're making $1 billion of after-tax net income a quarter, and if we go to see how much their dividend cost, it only cost $509 million. So their 5% dividend is safe for the time being. Pretty cool. All right. Is it Maui Power? Oh yeah, that's ticker symbol HC. Oh, no. Hawaiian Electric. Is it HE? Yeah, Hawaii Electric. So if y'all remember a long time ago, those Maui wildfires, this stock was fully blamed for that. They had a faulty power line that got blamed for causing all the fires, and they had to pay a hefty, near $2 billion fine. And the whole company is worth $2.12 billion. So they had to pay a fine that it's pretty devastating. But and they had to sell off their bank assets. I used to own them, actually. I used to own Hawaii Electric, made like a little bit of money and sold them, but I think they're kind of boring. Inactivity detected. Okay, TikTok. I can't believe that. TikTok makes me fill out a CAPTCHA every 1 hour to prove I'm streaming, I guess. Okay. Are you getting into any IPOs? Not really. Just because I can't really see how the business does. Like, there's no financials. Hey, what up, Lisa? How's it going? So, someone said Roblox. Roblox is a company actually owned by Cathie Wood. So if you head over to the Cathie Wood portfolio, her second largest holding is Roblox stock. This is like a really popular game. I'm sure you've probably heard of Roblox before, but here's why I wouldn't buy this company. Here's the good news, and here's why the stock has been rallying so much. Is because of this, and I hope this is real. This is the data that they give themselves, but I hope it's real and not kind of fudged up by AI bots like some other companies have been. But their daily active users are 111 million this quarter. Daily active users is 111 million, when the same time last year, it was only 79 million. So they have a ton of new, daily active users, like the users you want. So they have a ton more of those users that you want, which is great news. The sales are growing very nicely. Sales are up 21% year over year, but here's the bad news. Okay. Uh-oh. All right. Probably going to have to end the stream. That's not good. Okay. It says we're good. Yo, I do apologize about the Wi-Fi. It says it's good now. But yeah, the thing with Roblox is they're burning through a lot of money, and it's because they're stock-based comp. They're losing 200. The trend isn't getting better. It got 35% worse year over year, but they're losing 200 to 300 million of after-tax net income a quarter, and they have a leveraged balance sheet, nearly the same amount of liabilities as assets. It's mainly from their stock-based comp. That's how they're making free cash flow every quarter. They made 100 mil of free cash flow, but they lost 300 mil in net income because those non-cash expenses, stock-based comp, isn't calculated in free cash flow like it is in GAAP net income. That's why it's always important. Oops. That's why it's always important to look at every metric there. You look at net income and free cash flow. I would stay away from Roblox at this price. I think they're pretty overvalued, like pretty overvalued at this price. Um, okay, yeah, RIP, yeah. Yeah, okay, so we should be good. Sorry about that. This normally doesn't ever happen, but it occasionally does. So, sorry. An awesome CEO running Progressive. Oh, hey, I didn't know who the CEO is. That's cool. All right. Kudo said Gemini and Figure. Oh, those are the two IPOs. So Gemini Space Station. Here's this one, for example. They're expected to. Here's the market cap they're raising, or they're looking to raise. Uh, at this market cap of 200 or $2.2 billion market cap. So looking at a $2 billion company here. That's like a crypto exchange or something. Hey, what up, Edward? He said FN. Is that a stock? Oh, Fabrinet. Yo, this is a company I've looked at before. I do really like Fabrinet. They're super growthy. Yeah, check out this. They're very diversified as well in terms of the revenue streams. But the telecom revenue, how's that doing year over year? So that's up 46%. Datacom is down by 12. Automotive is up by 48. Well, let me just blend it all together. Let me go to the actual revenue. So revenue is up 20% year over year, nearly $1 billion of revenue, but 900 million of revenue and 100 million of it was net income. So they're making 80 mil of net income a quarter. They have a good balance sheet. They're in some niche industries. I've looked at their investor presentation before. They're pretty interesting. Where does their sales come from, actually? Sales come from 43% US, and then all these other. And then do beware, 30% comes from Israel. That's interesting. Okay. What up, Leet? He said thoughts on LXU stock. What's this one? LSB Industries. So a $600 million market cap. So that's a very small company. Do beware, only worth 600 million, but they're in ammonium nitrates. Uh, Ammonium nitrate, ammonia. So this is some kind of fertilizer commodity company. The sales are up 8% year over year, but they're not making profits. Like they lost, or they made 3 mil of net income this quarter. These year over year declines in the middle don't look good. So I guess this company is heavily reliant on the actual commodity of agriculture, mining, and industrial markets, or they make chemicals for that. Okay, interesting. Oh, let's go look at UNA. You know what? I I was going to look at them earlier and I never did. So if we go to the Buffett portfolio, you know who just bought the dip on UNH? Of course, that'd be you. That would be Warren Buffett. He bought 5 million shares of UNH, and that's really why the stock rallied up so much. It's because if Warren Buffett buys a stock, he always does his due diligence. He wouldn't just buy some random meme company. That being said, I wouldn't buy this stock over $300 a share. To be honest with you, I wouldn't touch them over 300. I wouldn't chase this one at this price. I would wait for under 300 because I just have a gut feeling they're going to go back to $300 a share. And that's where I'd consider nibbling. I wouldn't have this as a huge position anyway. I'd have it as a small couple percent of the portfolio. But here's why also a lot of the bad news is priced in. Like if we go to this PE right here, this low net income multiple implies a lot of future uncertainty. We can see that based off the EPS projections. In 2 quarters, the net income per share is only supposed to be $1.70. That won't even afford the dividend that quarter. So we are watching their margins, the government regulation headwinds, the Medicare, Medicaid fraud allegations. So there is some risk. You get a 2.7% dividend yield. That's why I wouldn't touch them over 300, really. Okay, so that's UNH. Fertilizer, yeah. So LIDR, will it fly? So this is a LiDAR company, or the actual company is called AI, like AI. So dumb, but yeah, very small market cap. Honestly, I wouldn't touch this one. Like they're only worth $100 million. So the whole market cap is $100 million. But here's why analysts are kind of bullish on the future. Oh, actually, never mind. I'm thinking of a different company. Never mind. This one is junk. Okay, so yeah, this one has no sales. 22,000 of revenue this quarter. Lost 10. They're losing 10 mil a quarter. Balance sheet's declining, not good. So yeah, I would completely stay away from LIDR. It just looks like a pure momentum company. Maybe there was some. Let me see what is there any news. Nope, no news. But there was some sort of news here that made the stock gap up. But I'd still stay away from that one. Very risky in my opinion. So look at MRP, really interesting company. MRP, Millrose Properties. So if I'm had to guess, just random guess, this is a healthcare REIT, but let's see. I will go verify that. So they are builders and land development. So it has nothing to do with senior housing, but they have a 3% dividend yield. So that's a very nice yield. So you get a 3% dividend yield with this company. These real estate companies can't wait for a lower interest rate environment. That's really interesting. Lennar, ticker symbol LEN, owns 20% of all the shares here. So this is kind of backed by Lennar. So maybe they're trading with the home builders. I don't know. So I wish I could give you more thoughts on them. I would have to look at their investor presentation, but you get a 3% dividend. 20% of the shares are owned by LEN. Warren Buffett just bought a huge share of LEN stock. So yeah. Oh, here's FUTU stock. This is one of my favorite ones. Oh, it's a spinoff of Lennar. Oh, that's interesting. That makes more sense. Okay, so here's Moomoo right here, or ticker symbol FUTU. I do own this company, by the way. Call me biased. I'm up 75% on my 8 shares. Here's why I love this company. If you're wondering what is FUTU, what is this stock, it's literally this app I've been using, this app that I'm on right now, or this brokerage. It's them publicly traded. So this little app I'm on, this is their stock. And let's see how they're doing. So first off, they have 27 million users, up from 23 million. They have a legit 125 billion of client assets. This is the incredible part is the margins here. The revenue's up 69 and the net income is up 111. So they legit have a 48% net margin. Near 50% net margins is crazy. These brokerages print money. That's the same with Robinhood, Interactive Brokers. They have incredible margins and they make their money off little commissions. The brokerage commissions are up 86%. And then they also make interest income. The interest income is up 43%. And recently, as of like legit 3 months or 6 months ago, maybe, they introduced crypto to the app. You can buy crypto on here, and that's 8% of the revenue, or 8% of the total business. It's grown ridiculously. It's up 175% year over year. So you legit have these 3 businesses that are all growing an insane amount. They have incredible margins. I use the app as well. So hey, they deserve to be where they're at today. They also do a yearly special dividend. So pretty cool. So yeah, hey, they're probably making a lot of that interest income from, like, first off, I keep my cash on this app. I have nearly exactly $1,000 of cash, and that cash earns me daily interest. But they're also making a little bit of interest on top of the interest that I make. So kind of cool. Hey, thank you so much, Flying Wasabi. I appreciate that. But yeah, by the way, if you want to hit the follow button, we go live every day. Check UPS and GIS. Ooh, General Mills. So General Mills is actually a pretty cool food company. They own a lot of cereals that you've probably heard of before, like Cinnamon Toast Crunch. But look how diversified that they are. Here's what I love about this stock. 22% of the revenue comes from snacks, then 15% cereal, then convenient meals, they're in like pet food, dough. They own Pillsbury dough, baking, mixing ingredients, yogurt, super premium ice cream. Anyway, one reason the stock has been struggling recently is because the organic growth has just been negative. Sales are down 3% after falling 6%. So the sales are down, but they're still making a lot of net income. 3 to 800 mil of net income a quarter. They have a very nice yield of 4.7% dividend yield. So General Mills is cool, but I would want to see the growth come back. I know a lot of health food names have been struggling. Like we look at Hershey's as well. Hershey's is well off their all-time highs. That's mainly a lot from the commodity price of cacao. But yeah. So Professor Pumpkin, what's up? He said GRBK stocks. So Green Brick Partners. I've never heard of this company before, but they are up crazy from 2020. So it's a $12 stock. Now it's 73. So let's go analyze this company, see if we can figure out why they're at all-time highs. So they're a builder operations central. So some sort of home builder, maybe. The sales are down by 2%. Net income's down by 22%. So the margins fell, but They have a great balance sheet. I do wonder why the stock has been doing so good despite the not so great growth. And I think that's because analysts were expecting the not so great growth. Like even though the sales were down 2% year over year, that beat the analyst expectations. So they beat on revenue, they missed on net income slightly, and missed on EBITDA. Anyway, they seem really interesting. They seem really interesting. Hey, what up, Tangrica? Broadcom stock. Which platform? Yeah, hey, Jesse, by the way, if you want to get this app I'm on, it's where you buy stocks. It's in the link tree in my bio. It's the very first link there. It's my favorite one. So here's Broadcom right here. Broadcom, they were up 9% on Friday with some phenomenal earnings. Let me actually see. So they beat on revenue. They missed on net income, beat on EBITDA. So they must have had some little one-time adjustment. But a lot of people know Broadcom for their semiconductor solutions. But the infrastructure software has been the main growth driver. The business, used to do $2 billion a quarter. Now it's $6 billion, $7 billion. It's insane, and it's done great things for the free cash flow. The free cash flow is up 50% year over year to $7 billion. And no way, Tangrica, thanks so much for the gift there, for the little heart. Thank you so much. I really do appreciate that. But yeah, the free cash flow is up 46% year over year. Revenue is up 22. This is really what you want to look at. The net income was $4 billion. Operating profit was up 48%. Record quarter. Another thing is Broadcom took OpenAI away from Nvidia. So Broadcom, it's right here. Broadcom signs $10 billion custom AI chip deal with OpenAI. They're selling OpenAI these TPUs, and that's weird because that's why I think Nvidia fell. Because they're going with Broadcom now instead of Nvidia. Strong AI growth strategy. Trump proposes new tariffs on non-US based semiconductor manufacturers. Yeah, that's why they've been taking a stake in Intel. So yeah, anyway, that's really interesting. Broadcom. They're at all-time highs. Congrats if you own them before today. I wouldn't buy them now at this time, but they deserve to go up 9%. Great earnings. Hood is finally joining the S&P 500. Exactly. You're right. That's why they were up 6% after hours. Robinhood, AppLovin, and ticker symbol EME all joined the S&P 500, and they replaced Enphase Energy and another two companies. I forget what they were, like Essex, something like that. I forget the actual name. But someone, hey, Eunice, I forgot to get to this one. Here's Grab. We'll look at this stock right here. This is Grab Holdings. So this company is basically backed by Uber. If we go to the shareholders right here, Uber owns 13% of all the shares. Toyota Motor owns 5.5% of all the shares. So basically, they're backed by some really big names. And what does Grab Holdings do? Well, it's literally the exact same thing as Uber, but in all these other countries. So they do exactly what Uber does, but notice the US and Canada and the UK aren't on here. It's Malaysia, Indonesia, Singapore, all these other countries. So that's why it was genius for Uber to buy the stock. It gave them instant international diversification in the same industry. So I think the future is pretty bright on Grab. I would probably just rather own Uber, probably the safer play. You still get exposure to Grab through Uber stock, but they're good as well. What's this one? UA stock. So, Under Armour stock. So yeah, can y'all believe Under Armour? They're struggling worse than Nike. They're pretty much at an all-time low. They have no dividend. Apparel, footwear. How's the sales doing? So yeah, the business just isn't growing. Sales are down 5% after falling 10, after falling 2. So the business just declined like crazy, and they're not making any money really. These are some really choppy net income numbers. They lost net income this quarter, last quarter. So to be honest with you, I wouldn't really buy the dip on Under Armour. I think it's not worth it. I'd rather buy Lululemon at this price than that one. Had to leave before I answer my question. SOGP. What up, Josh? You said SOGP. Let's see. I have not looked at this one. This is Sound Group. They did a $1 special dividend. Let's hope they can afford to do that because that could be bad news. So the stock has gone nuts, though. I mean, the past couple of days went from 4 to 37. Man, what was their EPS number? So net income. So they're actually a revenue-less Wait. this is data from 2023, so we don't get their income statement from 2025. We do get their balance sheet though. So what that means is this might be a revenue-less company, but they were a revenue-less company before today, and then maybe they reported earnings and they're finally selling something. I don't know. I, I wish I could give you more thoughts on this company. Global audio-centric social company. I don't know. I'd be super careful with that one, my friend. Duolingo? Yeah, Duolingo looks like a pretty good company. Berkshire Hathaway, BRK, oh yeah, Berkshire Hathaway. So yeah, Berkshire Hathaway is this. You just buy BRKB. It only costs $4.99. But the two stocks are the legit exact same. It's just one just basically stock split adjusted. Yeah, Berkshire Hathaway is like an ETF in one. They own Geico. If you've heard of Geico, it's like a huge insurance company. That's 30% of the business. Just Geico. Then they're in manufacturing. They own the Pilot gas stations. Manufacturing, McLane, they own stakes in a bunch of publicly traded companies like Apple and UNH, and pretty cool. Duolingo right here. I think this is a software company worth looking into at this valuation. So Duolingo has been struggling the past couple weeks here, just from the thesis being hurt. Like ChatGPT made a new language learning app that's free, or OpenAI and Google as well have a new free language learning app. And I've been hearing some people say like they canceled their Duolingo subscription and go to one of those apps. I'm not sure how that transition went, but for right now, the business is doing great, and I think it's worth looking into. Specifically, the subscription business, which is most of their revenue, is growing ridiculously and consistently. It's up 46% year over year after growing 50, after growing 45, after growing 50, after growing 53. I just can't believe it. It just hits a new record every year, every quarter. And that's the subscription revenue. If you don't pay for their subscription, you see a bunch of ads, and the advertising revenue is up by 55% year over year. So both segments are growing very nicely on Duolingo. The not just revenue, but profits. So sales are up by 41, net income is up by 83. So that means they have net margin expansion. The free cash flow is up 60% year over year. They just deleverage your balance sheet completely. You look at this liability ratio because assets go down with liabilities. So they just deleverage from 65 to 36. Great news. Everything in Duolingo is headed in the right direction financially. It's just the thesis being hurt there, and the future uncertainty is priced into the stock now. I think they've overdone it. So I think that one's worth looking into. Here's one I would be careful with, though. This is a very small market cap. This is Honest Company. What up, Flex? He said HNST. So Honest Company, they sell a commodity. They sell like diapers and wipes, like healthy versions. But look at the market cap. Again, $440 million company, extremely small market cap. And look at this. Whenever they reported earnings, they gapped down on earnings. Here's why I think why investors have been a little disappointed with the Honest Company. If we look at the revenue, the lifeblood of the company, the metric that's like most important but the top line, the revenue, the sales only grew by 0.4% year over year. It doesn't really beat inflation. Sales are only up by 0.4. So that's the not so great part. They are in a great financial condition though. They have like 60 million of net cash. Very little debt, so like 60 mil of net cash, and they made 4 mil, 3 mil. So I just want to see the growth come back to the Honest Company. So can we look at Lulu? Yeah, hey, try not to spam. Yeah, what up? Hey, Big Mac, what's up, dude? And the 3M, I'd be careful with 3M. Went through a lot of heartache holding 3M. Yeah, 3M went through that lawsuit with the U.S. military. Remember, 3M gave the military these earplugs that gave them cancer, and like it really did, and huge lawsuit for 3M around that. That's why they had and there's no real growth on 3M either. If you look at the sales on 3M, they haven't really been growing, but they own a lot of patents. But anyway, here's Lululemon. They fell 19% on Friday. I looked at their earnings. It was mixed. It wasn't good really, because the growth story is really the international business at this point, because the U.S. business, their North America sales were only up 1% year over year. So that's not good. The US business up 1%, but the international business grew 25% year over year. So it actually offset the 1% gain. So total, when you combine the two businesses, the total sales were up 6%. So sales were up by 6% year over year, but the net income fell by 5%. So that means they lost their margins. They also lowered their guidance on increased margin input cost inflation, but the margins fell 11% year over year. Not great because usually they have good, like Lululemon, they have strong pricing power usually. They're making the quality of the products have gone down. Like the joggers from 5 years, that 5-10 years ago I still have, look brand new, but the ones I have recently scratched up, holes in them easily. I still love their product. Actually, here's the thing: Lululemon has poorly timed their buybacks as well. So if we go over here to the retirement of stock, this is all before today. The stock fell 20% on Friday. So first off, all the share buybacks that they did, they could have bought 20% plus more of the stock if only they waited. But they poorly timed all these buybacks up here. They're spending a couple $100 a quarter on buybacks. It does still help you out as a shareholder because check this out. The net income fell by 5%, but the net income per share only fell by 1.5%. Because there's less shares that exist, the share part of the ratio went down. I think this one's worth looking into at probably around a 10 PE, probably 10 times net income. They also sell stuff I was looking on their website, they sell stuff they just shouldn't really, shoes, I don't want to get into it. Actually, that's a good spot to end the stream. Hope you guys have a great rest of your day. That was been a 3-hour stream. I'll see you all later. If you wanted to follow button, we go live every day, twice a day. We just look at stocks. I sell nothing. I have no course, book, Discord. There's a fake Nathan Robert. Yo, watch out. There's someone in here with the same name, profile picture as me. That's not me. I'll never follow you, DM you. I sell nothing. I have no course, book, Discord. So if you wanted to follow button, I appreciate that. I just joined. Hey, sorry too. I've been streaming for 3 hours. My head hurts. I'm gonna go. But I will be live. I stream every day. If you wanted to follow button, and if you missed anything, also best way to support me is just subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. If you just type in a YouTube Nathan Robert, you'll find it. But you can just go to the link tree in my bio. I'm also streaming on there, so if you miss anything, you can replay it. Sometimes I talk too fast, and you can rewind it. It'll be there forever. The beginning of the streams are fun to watch. So anyway, that's the best way to support me. Go leave a comment. Say you came from the TikTok stream. Anyway, have a great rest of your day. And thank you to everyone on the YouTube stream. Thanks you, Looney, for being a member. I really do appreciate that. See you later, Professor Pumpkin. William, I'm so sorry I didn't get to Open Door and CRM. I'll get to Salesforce soon, but they had ARM. ARM stock. ARM is really cool. Most of ARM's revenue comes from royalties. ARM is really a royalty stream business, if you didn't know. Join me on my next stream tomorrow to see more. See you later. Thank you all for being here. Hit the notification bell if you want to get notified when I stream. But a lot of people like to